Good morning, traders. This is Rose. Today is Tuesday, September 20th, and it's 9 a.m. Eastern Time. It's Rose. Today is Tuesday, September 20th, and it's 9 a.m. Eastern Time. Good morning. Okay, just hang on a minute. Okay. Yesterday was an interesting day, but I'm going to talk about the weekly and daily charts a little bit. Now, I don't have much information here, so let me add a little bit. All right, so on the weekly, yes, we're in a trading range, right? So it's pretty obvious here. And last week and the week before ended up closing as outside up and outside down bars. So we have inside, outside, outside, IO. Now, this week, however, didn't start as the inside bar. So it could have been the IOI, and then perhaps we would have been inside, but we went below the last week's low. So we do have a balance zone here, okay? And we do have a wedge here, as you can see, okay? So this is the first breakout. Now, this was an important target, which we tested long ago. And we do have a higher low. Bulls want to get back up to these levels. Okay, so they want to get back up and perhaps even further up. But obviously, this is weekly. Now, the bears may not be satisfied because although this area is holding them, okay, this is an area of agreement. And still, bears want to come down and test this lows. So it's pretty interesting area. You can see right here that this right there, it's holding. So if I actually put a line right there. So we've tested that, as you can see, okay, to the tick. Pretty, I mean, look at that. Right to the tick. Now, we're above that level, but, you know, it's only Tuesday, and tomorrow is FOMC release. So FOMC meeting starts today. It actually started around 8:30 a.m. And we're going to probably hear from Feds a lot, but tomorrow. So we need a catalyst to go either way. Now, the bulls want to get back up and test maybe the 50%. There is also an agreement area. You can see we have a trading range there. So if you take a look at this area, this is a trading range, okay? We broke down, but we look like we're failing to break out. So there's a breakout, but it looks like it's failing, but we don't know that yet. So this support area is holding. And now if we do get back in, if we do test the 50%, and if we do get above that, we're definitely going to want to get back up to these levels. Now, this is an important area. Obviously, this was a breakout test, and we sold but failed. Now, we went back up. We tried to break out, and we failed again. So we come down. So we have a leg one, and this is a leg two. Now, is this a leg two failure? Are we going to keep coming down? Are we going to test these lows before we make a double bottom? And then we go and go. So tomorrow can affect the rest of the week. If we end up selling, we might look like we're bouncing. If we end up selling with the third leg, leg one, pull back, maybe come down, that's a second push. And then the final push, we could end up coming down here, okay? Then market could turn around. So, but bulls want to turn this around. and they want to go back up to the 4,000. So let me restore that. That's not what I want to do. Okay. Here we go. So on the daily, this area of interest, which is a balance zone that I marked last week, and I said we're going to test it. And at that time, we were up here. And we knew that the day like this will get continuation at least. You know, bears want a leg or two down, and they got their leg, second leg, and we tested it, we bounced. And we came back here, we bounced again yesterday. Now, this it says 907, but you can also take September 6 low. So September 6 or September 7 low. This is an important area. Bears want to get back below and test this right here. So 38, 16, 50, the middle of this balance zone, attracting the bears. So if bulls aren't going to show up, and if we're not going to go to 4,000, which is around here. Now, the reason why I'm saying 4,000, or the reason why we're saying 4,000, look how far we are from the 20 EMA. Okay, so we are way far away. But doesn't mean that just because we're far away, we're going to snap right back to it. I mean, we're below the 50 SMA. We're right now hovering below the 100. And we might come down just one more time and have a new wedge, okay? If we do come down, make that, then I would love to look for a second entry. Then we would probably go back up, right? So 50% test. Bulls want to probably get back up to these highs, so and so. But I don't think the bears are done here yet. I mean, this area seems like an interesting area, but the bulls want to reverse this, go back up, okay? So the price is right now at 38.91, say. It's 90.50, but so we're going to, yesterday we closed around 90, let me see, we closed around 39.18-ish. So we're going to gap down at the open, and we'll see how this goes. But I'm not so sure about bulls just yet. Now, yesterday's price action was, it was actually a typical, this day repeats itself over and over. And I posted a chart in Discord. Although I'm not sure if I posted in the BTC Discord, but I kind of told these Discord members the rest of the day we're going to go up. There was another option at the end of the day selling, but once I see this bull flag, I knew we were going to go up. So, well, let's talk about yesterday's price action a little bit. So the day before, Friday, we got stuck in this trading range. We gapped down, and we had a wedge here. We went back up. Double top didn't really sell. I mean, you can't sell against these three bull bars, right? So we have wedge, and we come back down. So you know you're in a trading range. So yesterday's low and a yesterday's high. This is the range that we opened up, okay? We opened up all the way down here. We're testing. We know there are buyers there. And the bar one ended up being a very strong trend bar. So bar two is not a bear bar. Yes, it is, but it's a doji. It closed on its high. And, you know this is a continuation, so it's probably gonna go up. So it's trying to get back up to the, if you take the 50% of this Friday's trading range, bulls are trying to get above the 50%. So, I mean, you can mark it. Here, I'll mark it for you. So if this is the range, and this is the 50% right there, you can see that market actually went above it. EMA was target. and we came back down, right? So we have a huge short-term trend within the trading range. You're not going to look to sell, right? So this is right here is basically going to trap you because limit order buyers are here. There's a huge bull gap. Buyers are there. And you get this high one. The problem with this high one is that it closed on its middle. It went above bar 7. If you're buying above bar 7, it's not a good bar to buy with a stop order above it. But look at this beautiful leg. So you know this is probably going to get another leg or two up. So the goal is to get back up to yesterday's high. But we don't know if we're going to go there. We know there are sellers waiting there. There's an open gap we need to close. But all of these are scenarios and not necessarily will happen. So you have to look at, if you don't want to buy this, what can you buy, right? Maybe a second entry long. So you have a new high. You got a high one. They did buy, and they actually tested above it, and they closed this bar strongly high. But the problem here, there's a small trading range there. So again, this is the first entry long, is you still make money. So if you're going to buy above something, buy above this bar 8. So if you did buy above bar 8, you made roughly about 9 points. And from that 9 points, if you grab 5 points, that's a good scalp. But I'm interested in, for the swing long, I'm interested in some kind of higher low and another pullback. So this is the higher low. This is the high one that I'm interested. And is this time, look, this is not only a signal bar, and it's also a trigger bar. Signal bar because we went below that bar's low, and we closed it really strongly bullish. Immediately, it's a buy to close bar. So buy orders were right there, and that's a swing right there. So basically, if you're looking for maybe a 5-pointer there, and then a 10-point, and you're swinging this for 20 points, and in fact, the market actually made 20 points. That's a swing right there. Okay, so, and we're testing high of yesterday. I want to measure from there. That's between the 5 and 10 point, you know, there are sellers waiting, and sellers did show up. Now, if you do sell this bar 16, the problem with that is that we're above yesterday's high. Okay, so bulls wanted to test it, and they did test it. They actually closed bar 15. The problem here is that this gap right here, that they failed to close this gap. Okay, there's no bull bar overlapping with these wicks or the body. Now, we also have a wedge here, right? So you have spike, pullback, channel. We also have 1, 2, 3 wedge, impulse, first pullback, another impulse, second pullback, and then the last impulse. So you know, okay, you know, right? Maybe there to there. I'm going to take that. That's projected. But really, this is what I'm interested, either that or that. This could act as support because of this impulse move up. Okay, so if we did sell, I was eyeing these lows, okay, or maybe that low or that, maybe if bears wanted to sell it. But I said this is important. If we do break this, then we sell. If we cannot break it, we do not sell. This is going to go right back up. Now, market came down. If you did sell below bar 16, again, there's a gap here. Okay, so that gap, limit order buyers are waiting. And that's your first sell. So just like the first entry long, first entry short may not yield too much of a profit. Plus, you got a wedge here. This is the last bar, made the high, the third push high. If you put a line here, or a box, whatever you do, put a price line, okay? If you want to buy, you got to make sure that the bulls are closing is above 38.97.50. Strong bull bars want to test the highs. Do you see one? I don't see anything. So They keep coming back and testing, coming back and testing. What do you see here, right? So after 3 push wedge, you got bulls testing again because many bulls bought that close, thinking this is going to close that gap and go further up to the magnet, which was the 1 hour EMA. Kind of got trapped there. So if the bulls are getting trapped there, what do you think is going to happen? They're going to want to get out. They're trapped here. They want to get out. How would they get out? Well, there is a gap here. Maybe it's a good place to buy. Maybe above there. Let the bears test this breakout point. 14 breaking out above bar 13 high. And they come in and test it, go back up, and they kind of freed everybody. Okay, so this is where all these bulls got stuck. Finally, got a freedom, right? They are trapped out of their longs, and they don't see a bull bar closing. So they might be now looking for a second sell. So if these bulls actually selling, the bear selling, we will get about 20 points down, probably 5, 10, 20 points. So if the bulls and the bears are both selling, that means we're going to get some sell to close bear gap bars. In fact, we could actually end up gapping down below the EMF. But first, if you do sell, you're looking for a second entry short. Now, look, we're closing. First bar closes, second bar closes. Now, bulls tried once, bulls tried twice, and we have 1, 2, 3, right? So we're coming down. So second entry short is basically, technically, is bar 21, okay? And the bar 18, okay, breakout is not showing up, right? It's fizzling. Bars got wicks, small bodies, so no one's buying the breakout here. Then you get the second entry short. The problem with the second entry short is that it did not close that bear body down here, so it's got an upper wick and a lower wick. If you do sell this bar, you're gonna want to sell this 1 tick below, okay? It's a doji. You don't know. If it were to close, if this bar 21 had a body to close all the way down here, that would have been already a sell, sell, sell. Okay, so you would have take your stop and immediately lower it down. But because it's a doji, you keep that stop up here, okay? Because it can still go back up. And if you do put the stop here or here, this is what we call it's like a what did Al call this, a skunk stop once or twice? I've heard him call that. So basically, you do not lower that stop. You put that up here. Okay, so look what happened. Bar 22 institutions grabbed those stops, killed everybody on the law, way down, and then converted everyone. It's also a triangle. We've got a beautiful, if you didn't sell below bar 21 low, you better sell that close or sell 1 tick under. But again, you're selling below the EMA. Yes, bar 23 close this is problem. You want to sell above the EMA. If you think that there's exhaustion and the bulls are not able to get back up to highs, better to sell here with a small risk, okay, than selling here. Now, can you sell 24? Yes. But again, you're selling because you're hoping we're going to test these lows, right? So you got the wedge. So these are the targets, basically, okay? Where the legs began, the second push began, and the third push began, that's where the targets are. That's where the bears want to test. So first target, second target, okay? There's a breakout point, but we break that breakout point. So you can keep selling, but you need to start taking profit or thinking of taking profit here. So right around here, we have a bounce, but a leg and a bear channel that steep and tight like that, it's probably a minor reversal. It's probably trying to get back down here to see what's there. There's another bull gap there, so we know buyers are there. In fact, the bar 32 came down and tested that, and then they found buyers. Now, bear sold. They try to sell again, right? So if I want to buy, I'm looking for a bar that closes on its high bullish. Now, I've got the first bar, but before then, you got the inside bar 27 and 28 continuation. But that's the first long, right? So you're going against 1, 2, 3, 4 bear bars, very strong, and they're gapping down. You know bears are going to try to sell this. Now, bar 30 is their second attempt selling. The problem here is that they failed, right? So continuation is weak. There's no bear bars closing underneath bar 30. Then suddenly you get bar 32. Okay, that's great. I want to buy it. But the problem is you're stuck in this trading range. Is this a bear flag? Well, bears tried again. They got a double top. But where is the activation of bear flag? Where is that? Well, 35 is definitely not an activation, right? So that body did close up here. It didn't even close down below where that 34 open. So it couldn't even get, beyond 34, only one tick, but where's the bear body? Bar 36 tries again, but again, it's not able to activate it fully. So now you have a head and shoulders pattern, right? You have double top. So bulls can actually break above this. Now, I would have entered with bar 37. Bar 37 is your basically signal and a trigger. It's higher low, okay, is higher than this low, and you got a lower low, and you got a beautiful signal bar. However, it did not close one tick above the EMA, but it closed really strong, and bears failing. I would have bought that probably one tick above. I would have put a buy stop order, and my stop would be between 36 and 32. I don't have to put it here. Once I see a setup like this is one of my good setups that I love using. Once I see no continuation, I see a bar like this, I'm going to buy it. My stop is going to be somewhere in between here, okay? Once I start to see bull bars closing, I will move that stop, okay? Now we're going, but I'm also watching a wedge. Now, here is the last bar, 42, is the third push on this wedge. So what do? I'm going to take that. I'm going to put it right there. And I'm going to see if bulls are actually able to close bull bars above 38.91. I'm looking to sell this. The problem with this is that we have a gap here now. Okay, we know buyers are there. So bears who sold this, they're going to take profit either at the EMA or somewhere test of that gap. Bar 46 tested that gap and immediately closes bullish. Okay, that's good for the bulls. Now, we do have a bar that closed above 91.25, but we're not able to get back up. Looks like we're again rescuing those bulls got stuck buying bar 41. So if you actually bought here, you got to think of this, okay? So I'm buying this. I'm hoping a reversal all the way back to these highs. But what if this is just an attempt to get these bulls out of their losing positions once again, and we might come back again, okay? It's middle of the day, right? So we have down, we have a big up, some kind of a big down, and then we go again up. So we're in kind of a trading range here, all right? So, and look what happened. Bar 49 is a bit of a surprise bar, but it's not that surprising because it's going right to the EMA. It really didn't close. If it were to close underneath the EMA bearish, I would have said that's a surprise bar. It's probably going to try to get another leg or so, but it could not. So you got two legs here, okay? Leg one separated with 44, and then leg two, and the buyers that show up right there. But we're in a trading range. We made a lower high, right? So bears try again, but no continuation, bar 50. So I'm thinking here, wait a minute, we're in a trading range inside a bigger trading range inside a bigger trading range. We're going sideways, okay? But we're not making a triangle. In fact, we are in some kind of a channel and we're up. This is a bull flag. So I'm now looking for a higher low, okay? So look at that. First push, okay, pull back. Second push, pull back, And a third push, bar 56, is a really nice close. So I'm looking to see if we're going to get a bull bar closes above EMA. I might buy it. Nope, I don't have it. Nope, I don't have it. It's still coming down. Okay, I don't have it. Oh, I have it. Okay, so if I buy that bar, okay, that's the first entry to me because we made a new low, right? So bulls will only come in with a higher low. But look, 3 bull bars, a beautiful wedge, 1, 2. That's the third push, final push. We know the bulls are going to want to get back up here. You can actually scalp if you do buy above this bar or the first bar that closed above. Your stop's here, okay? But you're going to scalp at the top just in case. You may think the price is trying to go there, but you don't know. They might actually start to sell right from there by making a double top, lower high with this high. And there was also, I posted a chart, there's an alternative for the bears. Bears could have swing this down. So they couldn't. We end up making a higher low and another, okay, breakout. So now we're going up here and we're probably going to go test the magnets. Okay, so we do have a breakout. So there you go. Beautiful. And we got that breakout around 3 o'clock. So we have beautiful continuation bar 68. You could have both that or 1 tick above if you didn't buy this or if you didn't buy this. And market sweeps your way. It's going up. Another single bar 70, but no continuation, right? So you have high 1, beautiful signal bar and a trigger bar now with bar 71. Some buyers will buy 1 tick above that. If they cannot, they're not fast enough to lower that stop order 1 tick above 71, they're going to get filled above 70. And some will take some profit there, maybe a 1 point above, just in case, because towards the end of the day, and they do take profit, it comes down. But again, single bear bar, it's kind of a small pullback bull trend, okay? But it's really a spike pullback channel. And you know this is trying to go up. Another bar, right? 77 is an institutional bar at this point. And it goes up. And finally, it starts to come down. I don't know what happened the rest of the day. And that was about it. So this right here, not be able to closing bear bars underneath, no selling and testing the lows, even though this was a trading range. Now we broke out of the trading range. Okay, so let me get rid of that. We closed that gap. Now take a look what's happening here. What was market doing yesterday? See this right here? Okay, there is a trading range right there. Okay, market is open. Market tried to get back up here, but it kind of failed. Now there's a smaller trading range right there. They tested this. Okay, and then came down. All right, so Globex, I need to fix that. We're right at the Globex low. We have support here. We might come down here. This is what I'm interested, 38.75, 25. We might come down and test that before going up, but we have a gap down now. Okay, so we're back inside the two-day trading range that we broke out of briefly end of day. We're back there. Why? Because there is an area of interest. But we also broke out of there because there was a triangle. So we're testing that triangle apex. Now bears might sell and bring down here, but there's probably support here. But I'm not going to buy anything because of this. Okay, we're probably going to come down here. So we have an island bottom is on the 1 hour. Okay, and we tried, you see, there's a gap here, so I call this an island. Now, can we sell? I mean, they're trying, so we have a breakout, gap down. I don't really trade the first 2 bars. We're testing this trading range you see this right here? I don't want to, we broke out of that trading range. See this amount of, see this right here? This is the breakout. If you measure that and project it down here, we could end up coming down here. So whatever the amount of breakout could project all the way down here. I'm not buying this. It's coming down to here. So, but if you're selling, be careful, okay? There's support here. There's gap there. There's support here, okay? Buyers are probably here. Even if we push further, buyers are here in this below 32 to bar 1 low. This area is a buy zone, okay? So, let's see if the bears can make it down to 38.75.25, maybe even further down a little bit. I don't trade the first 2 bars because it can mislead you. I stay out of it. But there's an area I am interested, this right here, between the 75.25 to 73.50, that buyers might be there. So, yes, what are the chances of yesterday buy climax and today sell? Well, yesterday was not really a buy climax. Well, this looked like it. So I see what you mean by there. I understand what you're saying. But we opened up in a trading range and we got a brief breakout. That's all we got. So this area is holding. I have area of interest. This is 38.16.50. Is still an interest to me. And unless we start to get bull bars above 3,900, then we could go up to 4,000. Can this be a sell climax? Well, there's an area of agreement here. Okay, so we broke out of it with 1, 2, 3, 4, 5 bull bars, pull back another. So there might be buyers still here. I don't know, but we're testing it right now. So I'm going to wait for bar 1 and 2. Can market reverse from here and go all the way up to this levels? Well, we do have a wedge. 1, pull back, 2, pull back, 3. Okay, on the Globex chart. Now, if this is the last push down and the last bar, first I have to wait for this bar to close, right? Then I would look to see, I would put a line there and look to see if bulls are going to start to close. I would probably look for a pullback and then buy a swing long. Now, what if bears would sell? Well, then you would put a line here and see if the bears actually break that down. If they do break it down with bear bars, that means this wedge failed to reverse and we're going to keep selling, okay? Could it sell? Could it become a sell climax? Well, we do have a gap down. First bar is a doji, so it's confusion. But you knew it was going to be a confusion because you're right at the balance zone. Now, in order to sell this, you want to see bar 2 break below bar 1, close strongly bearish, and get the next bar also bear close. And a close way below under, that would become a sell from the open, okay? But that can also be blocked right around here, okay? So if we do close this bar here, go back up and close another strong bear bar, that's a sell bear trend from the open. We don't have that yet. Right now, all I see is 2 bars overlapping. Buying above 63 and 64. Well, there's a wedge there. Okay, so what do you see here? Bull flag, wedge bull flag, right? Look at the alternating bars. Bears trying to sell, bulls are going above and testing highs. Bears try to sell, again, no continuation. Then you get the bar 60, okay? Then you get the 61 and 62. So if this looks like a bull flag and you get the first attempt to break out, that's the first long, right? So buying above 60 is your first entry long. You get filled with 61. Now, you get a pullback expected, right? Because you want to see a higher low to swing, right? If this is a bull flag, don't you want to swing? And fine, but how would you swing? You would look for a higher low. So 64 is a bear bar. Now, buying above a bear bar is never a good idea, but look how the bar 65 closed, right? Still, it's difficult, but anyone who were buying got filled. Then you get a continuation bar, okay? If you're not sure and you don't want to buy, like I said, this could have been maybe a triangle, false breakout, and then come back down. I said, we have another option. I actually posted the chart, but look what happened. You can actually buy above here, okay? And your stop, you could put a stop here, maybe underneath here or there. You're looking for a 1-to-1. You got your 1-to-1, so you know bulls are in charge and they're going to go to the magnet. Now, if they could not, say the bulls actually did break out and you filled, right? And you're thinking, this is a trading range. Maybe I should take profit here in case this comes down, okay? But it never did. Look at that. Look at the bars. It's closing at 3 o'clock. 3 o'clock, you either look for a buy to close or sell to close bars, okay? Yesterday was buy to close bars. It started with 3 o'clock, okay, right on the dot. So you know you're going to get continuation. And I'm seeing a pattern that actually gives me a lot more confirmation, and I'm seeing a higher low. Great swing right at the 3 o'clock. This is going to last. And plus, I know this day, so it's a higher probability for me to be long. And basically, my math is this, okay? I'm looking at this. Bears only sold, not even the full 10 points, right? So if you actually measure here, all they got was a 7, almost 8 points, but they could not scalp a 10-point. So what does that mean? If bears are not able to get a 10-pointer here, do you think they're going to be able to sell? And the bulls actually get above that. So if you measure from here, bulls started to buy. I'm looking for 20 point, and I'm looking for a 40 point, and the 40 point right there. That's a beautiful swing. Half swing, half trend, 20 point. And then once they start to close bull bars above it, they're trying to get to the 40 point hard trend, okay? So right here, that 3 bars, higher low, that's, to me, it's a buy. So let me see. The chart that I posted yesterday, I'll find it in a second. Here, this right here. Just right here. So this is what I was looking for. I was looking for a pullback to the EMA, some kind of a bull flag, and then go right back up. And it just worked just fine. All right, let's see. Let's get back to, all right, so we do have a bar 2 is a strong bear close, good for the bears, right? So wish bar 1 was a, bear bar, but that's not a bull bar, so that's a good thing, right? So now they're trying to get continuation and trend from the open. So if they do close this bar 3 like that, that's great. But remember, there is a gap here. They're trying to close this gap. So the bears are trying to close that gap. I said we're going to get down to here. We're testing that. Now, can this actually reverse back up? We're closer to the low of yesterday. If this is trend from the open, we might end up coming down here. In fact, we could end up coming down to 38.60 area. But I'm still watching that gap. Okay, so let me, the gap is right there. We're right inside that gap. Okay, so why do you think the bar 3 is stalling here? Because of this gap. There are buy orders there. They're trying to prevent bears from breaking below and closing a bear bar below that line, below that banner, that blue box. So if bears do close it, they can continue to come down to low of yesterday, because this is now a, it looks like a sell, but they need that. Now I'm looking for 2 bear bars, closing on their lows and breaking out. So bar 2 is the first and the bar 3 is the second. So I know that the bears are in charge here. So good for the bears. It's going to bounce eventually. Okay, so the bears closed the gap. So there's no more gap here, but there's now a gap right down here. It's very close to the low of yesterday. I want to see this bar close bearish so that they can continue to sell. But all because of this area of interest, all because of 38.1650 has always been an area where I wanted to see bears actually test it. So now I also want to point out something here. We do have a extending triangle here. Okay, so we have a breakout, fail, come down. Say, take that right there maybe. Or can I take this? Can we come all the way down here? I don't know. This is what I'm interested in at the moment. Because this is a trading range and there are probably buyers waiting underneath 36 and then go maybe 10 point, up to 10 point. If we do sell and breach below the low of yesterday, I'm going to look for buyers somewhere around here. Okay, so they're still selling. Good for the bears. They broke these levels. They're trying to come down to these levels. Now, I have a hourly chart here. I measured last week's high to low, and I have last week's low, the mid, okay, and last week's high right there, and a last week's low right here. So bears want to break this low, and they want to come down to here. This is their target. This is what they want. Can they do this today? If they break this strongly, sure, they can. But then I would look for maybe this right here. But again, like I said, somewhere here, I think the buyers are waiting. Even if we do sell, we could end up coming down here. Amount of breakout projected down here, bulls can still show up. So I'm going to leave that line there. Okay. Just about. And keep an eye on that for bears. Okay. So, okay, bar 3 is not that strong. It did close on its mid, but it didn't close a major breakout bar. It's got a lower wick. Now, if the bears fill that wick, that means they're going to keep coming down. But look what's happened. Why did that bar 3 lower wick happen? Well, I put that for you in case you didn't see it, okay? That's because of that, right? So because of this, and if you look back left, what do you see? Look, break down, break up, comes right back to it. Breakout fails, comes back and breaks down. Then comes back again, test, breakdown, comes back again. So this area is important, other than being a gap from yesterday. So you knew we were going to stall here. And I said we're probably going to bounce, and we are bouncing. We tested the low, but we could not close a bear bar below it, and that's a problem. Now, I like to see bears, if they're going to continue this, they're going to have to fill that lower wick, bar 3, lower wick, with a bear body, and then sell. If they cannot, if let's say this bar 4 closes like that, and the next bar comes in, chances are there are limit order buyers right underneath that. It could do this. Okay, I've seen it happen many, many times. That's how I know the limit order buyers could be getting, stacking down below bar 4 low. But I need to wait for bar 4 to close first. Right now it's bouncing. That's all I see. If bears want to continue, they can close this bar 4 last second on its low with a strong bear body, taking out the wick and filling that wick gap. If they cannot do that, there's no way I can sell it. Now, can I sell at the close or the high of bar 4, thinking this is going to get another leg? It could, But like I'm saying, if it does sell, it could stop here again because limit order buyers are probably there waiting. So now you understand how important the gaps are. Okay, yes, bears closed that gap, but that was not just a gap, it's also an area of agreement, right? Market did something there several times, not only gapped up, came back and used that as support and then broke out, right? So probably whatever the orders left there activated with bar 4. Can we continue down to 3862 area? Yes, but I need to see if this is just a pullback and then we can sell again. Now we're way far away from the EMA. We're testing some kind of trading range lows, but I think bears might continue. I just need to see what they're going to do with the open of bar 5. Now, some bears will try to sell, and they will most likely. They're going to start selling probably the close of bar 4. And sell stop bears, they might actually put a sell stop right underneath bar 4 also to sell. So if I'm going to do one thing, I don't want to buy it, obviously, right? So it's still bearish, and I'm not going to buy with a limit order. Even if I buy, it might go up a little bit and then come back down. This is more bearish, and there is okay, so bar 4 closed really bad. Now, there is a magnet here. Some bears, stop order bears, will try to sell underneath bar 4. To me, this is dangerous. It's not a strong breakdown at the open. It's not a strong sell to close kind of trend kind of at the open, but it's still bearish. So let's see what happens here. So there are buy orders and there are sell orders underneath 4. But if I'm going to do one thing, I would wait for bar 5 to close. You see how that bar 5 just bounced because there were buy orders there. See how it's bouncing? There were buy orders right underneath bar 4. So the limit order buyers are buying, thinking we're too far away from the EMA. We're at the lows. This is still a gap. There might be buyers here. I would not buy it. I would wait for a good bull bar close. I would not buy it here. Now the bears, they're also sell orders. Now they're selling because they want to break below bar 3 and they want to continue, especially if they do close that bar strongly bearish. They're kind of filling that wick gap because they want to come down here to that trend line, to the low of yesterday, and they're trying to get another leg down. So can we get a double bottom here? Although, do we have news here? Let me see. We don't have anything, but we might hear some Fed members talking, so we don't have anything the rest of the afternoon. Some bill auctions, but that's about it. Now, gap down and kind of a trend from the open. We should continue down a little bit. Let me see if I can find. This right here is problem because there were a lot of buyers there. If that bar 3 to close really strongly bearish, we would have been already down here. So bears need to close a bear bar underneath this area to eliminate it. I'm going to get rid of it so that they can continue to come down. To eliminate it, I'm going to get rid of it so that they can continue to come down. There's also now 1 pullback, 2. We might pull back again, make a third push down before going back up. Also now 1 pullback, 2. We might pull back again, make a third push down before going back up. Limit order buyers tried, but they failed. So this is more bearish. If I were going to do something, I would have probably sold it, not bought it, because this can continue to come down to 38.60. Here's the problem with this. We don't have this. Okay, you see how strong the bar won, and then we got constant strong one bear close after another one. So we're having not even this. So that doji is problem. Bar 3 wick is a problem. Bears are still trying to get their continuation. It's still good for them because of these. You know, we're so close to the magnets. This can continue. But eventually we're going to reverse because it's not that strong at all. If they can close this bar on its mid or further down. Okay, so they couldn't close it on its mid level. It's higher than its mid level. So some of the limit order buyers still showed up, but all the way down here. Now ATR is almost 8 points. Do I want to buy this bar 5? I don't know. It's a pin bar. It's a bear bar. Not really excited about it because 50% is probably where the buyers are, if there are any buyers. If you do buy it, you're thinking, is this a second entry long? Because we went up. Could this be a second entry? Impossible. But I don't know. I'm not. It could be just too low that the bears are not interested in selling right away, so they're selling the pullbacks. So I'm still not interested. Unless I see strong bull closes, then I'll buy. And maybe a test of a double top and then take profit there. But I don't have any reason to buy this because bar 5 is a bear bar and a pin bar. And 3 bars overlapping, there could be buyers at the 50% of its entire length. And bears can still push this down to 38.60. I'm just not interested. Now, there's a 3 bar breakout. It's very vague, but it's there. Okay, so we do have a breakout with bar 3 body. If I put, is this where we're going? That's just about 38.60 I talked about. Now, it's possible that we might go there, but this bar needs to close bearish, bar 6. If you want to buy, then you have to look for a really good bull close, and that's not there. Some machines see this as a double bottom, so they want to reverse it and get back up here. But I don't know, I'm not really interested in. I need to see a good bull close. But first I want to see bar 5 midpoint tested to see if there are actually buyers there. Buyers did show up a little bit earlier, way above. But how do you know this is going to go right back up? Now, bears failed. They tried to sell also underneath 4. They failed. They scalped out, but that's all they did. But they still prevented bar 5 from closing bullish. If bar 5 was a bull pin bar and closed like that, then I would have said bulls are going to take this all the way up here, and we're going to get a double top, maybe a triple wedge push to the EMA, but I don't see it. So I have to wait for at least the 50% to be tested and see if there are buyers actually there. But chances are we're going to make a wedge push down. So tomorrow's FOMC in the afternoon. So everything that you'll be doing probably early in the morning sometime around 11 o'clock, market is going to go into a trading range. It's not going to be fun. So it happens to be my streaming. Surprise, surprise. All right, so we just tested just about 50%. I mean, I'm just eyeballing it. And the bar is bar 6 is stalling there because there were probably buy orders there, but bar hasn't closed, so there's about 9 seconds left. But you see how it's stalling right there at the 50%? Similar thing that happened here is happening here, okay? Limit order buyers bought here, bought down here. They're trying to buy. They're still trying to reverse this up because they don't see a strong bear, okay, trend from the open. But I'm not interested in because I don't see strong bull closes either. So if I'm going to do one thing, either I'm flat or I'm going to sell. So because this can come down to 38.60 before going up. If they start to close bull bars, then I'm going to say bears try to sell once, pull back, they try to sell twice. And if I want to buy, I want to see a really good bull bar and another bull bar. Then I'm going to say I will take profit here, and then most likely we're going to get to the EMA. So some limit order buyers at the 50% showed up, and underneath bar 6, they're trying to close a bull bar. I would believe if the bulls actually close bar 7 on its high and fill that wick gap on bar 6, then that would give me some kind of bull pressure. But sellers waiting here looking for a double top. I don't see that bull bar yet. I cannot buy it because this can continue to come down to, like I said, 38.60, maybe even 59.50 or 59. So 60 to 59 price can dump. And then look for buyers. Continuation low of yesterday and that trend line. But really, this is the trend line I'm interested in on the 1 hour chart. Okay, so if we're selling because we have a expanding triangle, it's kind of a bear flag. This is where the bears are trying to come down to. Test the last week's low, break below, continue to sell. So hold on, somebody said earlier, could this be a sell? Ethan, I think that was you, wasn't it? Ethan said, could this be a sell climax day? Well, it's trying to sell, but it's just not that strong. I don't see breakout bars. We do have a wedge now, 1, 2, and 3, but the bar hasn't closed. I can't really call it. Now, can we continue to come down to here? It's possible. Some will measure that, but that's not how I measure. I like to see continuation. There is the wedge now, micro wedge. Okay, so 1, 2, and 3. Bulls need to close a bull bar and fill that upper wick of bar 6 with a bull body if I'm even interested buying. I am not. They're just buying, scalping, buying, scalping. I'm not into that. I mean, I can, but not when I'm talking. Now, because of this mess right here, it is okay for me to believe that some buying pressure is coming in because bears tried twice, once and twice. Now, if I do see bulls actually do close this body somewhere up here, okay, then I will have a reason, okay, to maybe buy and scalp at the highs and leave a runner towards these highs. But I need to see bar 7 show me that bulls are in it. I don't see it. So it's better to be patient. Is it a barbed wire? Yes, it is. It's a limit order. When you see a barbed wire, just leave it alone. Let the bulls and the bears do their thing. They're going to keep testing these highs and the lows, okay, until they get some kind of a breakout or make a decision. Well, the clues are there. Bears are not doing well, and bulls are exploiting that. So they're buying below these lows. They're buying below those lows, right? So they're showing us that they're kind of buying these pullbacks, and the bears are also selling, okay, at these highs. So if we do go up here, can we sell? I'm sure they will try. But this is just too much of overlapping bars with wicks, and to me, it's more bearish than bullish. I don't want to buy it. Now, if you do buy, you want to see that bar close really strong. Bears are probably waiting at the high of bar 4, bar 6, and all the way up to open of the day. At least wait for bar to close. Because if you jump in right now and thinking you're going to get to the bar 4 high and scalp there a little bit, what if it just last second it just turns down and closes bearish? Then you lost all that money. That's what a barbed wire does. Barbed wire is basically, I also look at it to see if there's some kind of a expanding triangle. So the bulls are trying to close above this line and get up to here, okay? But I don't buy it like that. I would wait for bar to close. So somewhere, if they do buy this, somewhere around 38.79 to 79.50 area, sellers are waiting. The high of bar 4 and a little bit above bar 4, sellers are waiting. Triple bottom, some bulls are betting market to go up because, you know, they might think that this was not bearish enough, so they're trying to enter. I don't know, I would wait for bar to close. Because you're buying in a small trading range limit order, and they did show you that this is a limit order. They sold above, bought below, sold above, bought below. They sold again, came down. Now, bar hasn't closed yet, so I don't know what it's going to do in 1 minute. They're selling above things and buying below things. It's very dangerous. You might make that 2-point, but it'll be a very scary 2-point, you know, scalp. I'd rather not do anything. When market gaps down, okay, you gotta start thinking, is this too low for bears to sell? But there's still space here. Is there some kind of magnet that bears might want to think that would be a good objective, such as low of yesterday? But if it's too low to sell and they're showing you that it was, not many bears, you know, actually sold it, because they might be thinking a pullback sell might be a lot better, okay, strategy than to sell down here. Because if they really wanted to sell, they would have closed that bar 3 on its low. Would have been a breakout continuation strong. Because of bar 3 and bar 1, we're getting this mess. All right, so this is the basically the second entry, but I would say it's the first entry. Some would say, no, that is the second entry, but we made a new low. So to me, this is the first entry. Now we could get a second entry and go long. So you want to see bar 9 close bullish to get continuation. But again, this is the first entry. We may not go too far. Remember, you're in a limit order market. There are probably sellers there. And anytime in a limit order market, when machines see a good bull close like bar 8, they're going to sell it. So I can't just jump in. I already knew this was a new low and it's the first entry long. I rather to wait for a second entry long. So I'm still waiting. Yes, I might have lost, I don't know, 40 minutes, 45 minutes, but who cares? Market is still bearish. If they're selling a bar like 8, you know, I can't assume that this is going to go right back up to the high of bar 1 above open of the day tick price and then test of EMA. I don't know. Machines now sold the highs and the close of bar 8 and they're scalping. Now, if that bar actually closes strongly bearish, more bears will jump in and it's going to be a sell party into the 38.60 to 38.59, like I said earlier. We could have been dumped all the way down to 38.51. And low of that will be just slightly under low of yesterday. Like I said, from these lows, do 5 point, and you can add another 5. So somewhere here we could come down, test, or 2 points, okay? 2 to 5, an additional 5 up to 10. They can sell. So I'm interested in seeing now bears closing this bars on its low. Now we have a micro double top. So this is a bear flag, okay? One bar only closed above the apex and there's no continuation. If there was, that's why I said if there's another second bar, then I will buy and we're probably going to go up here. But that didn't happen. So we're now coming down to this area possibly. And if we can break that. See what I mean by that? This is why I didn't want to buy. I think we're going to end up coming down here. And daily chart still since last week, I've been pretty adamant about this 38.1650. So buyers are waiting around 59 to 55 area, maybe a little bit lower. Right around here. Okay, so we are testing the trend line. If we do break it, then we could get a measured move down. We need a bear bar closing somewhere down here. Now, what happened on the Globex chart? Well, that wedge failed, right? So we're now down. There was, I could say, this was, or it still is, or was at this point. Look, measured move right there. When a wedge fails, okay, I get the measured move target. We breached below the 63.50. Everybody got filled who sold into that. Now, can this go further more down? It can. But bar 10 needs to fill that lower wick of bar 9 with a bear body to continue down into the area I talked about. So this bar 10 needs to close really bearish. Could this be all the way up here? And we could come down all the way down here. That's 33. 33 is right around here. So that would be my target line a little bit below the breakout of this 1 hour chart target, and then finally breach it and then reverse back up. So it is doable if I want to get fancy with my bear continuation, but it's just not that strong. So I'm going to get rid of it. I'm trading the 5-minute chart, so I need to wait if this bar 10 closes on its low, preferably very close or at or one tick below the prior bar's low, that's continuation. We're going to get into the 60 or 59 area. This bar is young. I mean, it's a fresh bar, right? So there's still 3 minutes and almost 10 seconds. So if I'm going to buy, I want to buy a little bit down below. Bears trying to get continuation. They got a really nice bar, 9. I mean, it's not that nice, but still it closed below its midpoint. So they don't want to get failure. They want to get continuation. It's not a really good breakout bar. So, and it's been overlapping, right? So what does that mean? If the bars are overlapping, just like machines looking for a strong bull close, they're going to look for a strong bear close to buy. Now, this isn't a very strong bear close because the lower wick is rather large, but it is still a bear close. So they're buying below things, right? So that's what a limit order does. And they want to scalp a couple of points. Can the bulls finally take over and go right back up from here? Well, you'll know if that bar 10 closes on its high and taking out the 80 to 90% of this bear bar prior. But still overlapping, there will be bears wanting to sell that close. So I don't know. I'm not really into buying anything here. This can still come down. And I'd rather for it to actually come down, because it is obvious that bears are showing me clues. It's just that they're not that strong. Now, bar 8 was a good try on bulls, but now bulls need to show me another good bull bar, perhaps an outside up bar. So that means they're going to have to close that bar right above here. If they do that, then we're definitely going up here. But since I don't have it, right, I can't really do much about it because we made a new low. The bar 10 low is lower than the prior bar's low. So I think we're going to keep going down to 38, 59, or 60 area before we even have an attempt to bounce hard. So think about it. If you actually bolt the close, you made more than 2 points scalp, right? That's what the limit order is. So you're going to hear, if you watch the videos, you're going to hear Al say, if you're buying and selling with limit orders, you have to scalp very quickly, okay? That's all there's to it. You just grab a point or two and you're out. So bar 10 did close a bear body, but it is a really bad continuation, and it could not fill the lower wick of bar 9. So that is a problem for bears, okay? There's also a wedge here, down here, up here, down here, up here, down here. So we do have a wedge here. So the bulls are now, if you put a line there, trying to close the first bull bar above this line. But eventually, I think we will come back. That's the one that I would like to buy if I'm going to buy. Right? So this would be your first entry long. Buying above bar 10, you need to be able to make a 1 point. So measure it, right? So you get filled 1 tick above, so you get filled at the 70. Price has to go to 71.25. It went to 71.75 to give you that one solid point. So you scalped it. Good for you. Now what? If your stop is here and you haven't scalped out and you're still in your long, You're praying and hoping that this bar is going to close up here. What if it doesn't? That's why that initial 1 point is very important. Just get that 1 point. If you're buying above a bear bar in a limit order market with the first entry long, grab that 1 point. If you're that inclined to scalp dangerously, get that 1 point and get out of the way. And then wait for a second entry long if you think the market is going to go up. Market already show you that you can make more than 1 point. It went up 1 point an extra 2 ticks. So that's good. But your job was to scalp that, not linger in that position, right? Because you're buying dangerously. This can still come down to 60 and 59 and further down. Bears are printing continuation bars now. Continuation came down. Look, 2 bear bars closed. So these are, to me, strength, okay, in the direction of bears. Now look at what's going on the Globex chart. Bunch of continuation. It's weak, but it is there. 1 hour bar is strong. I do see impulse pullback, impulse pullback, final push. So from there to there and there. This is where the bulls are trying to go. 38.76 and eventually break out, close a bull bar and get back up here. But I will believe it if they do close this bar bullish first, not with a huge upper wick. Okay, so counting the pushes. First push, pullback. This is the second push. That's the pullback, second pullback, and a third push. So the bulls might be buying, but I don't know yet. Limit order market, it can still continue. This can pull all the way down here. And if they do close it up here with a bull bar last second, then this is where the bulls want to go and eventually break above that. But I don't see it, right? So the bar hasn't closed yet. You cannot buy and sell. I'm just trying to show you guys what it's doing. All right, so no good bull close. Now, limit order market, where are the buyers? There might be down here. Between that low and that low. Somewhere here, there might be limit order buyers. I'm not going to buy it. See how it's coming down and testing the low of bar 11 and then jumping? That's why I said the limit orders are probably there. Now, if you do buy it, you want to grab that 1 point, okay, and then leave a runner. You still want to scalp that 1 point. You're still in the limit order market. There's still probably sellers waiting there. But if you did buy where I said the limit orders are waiting, so what they do is you're going to put orders, bunch of orders there, just like they did here. Just like they did here. Okay? And you're going to grab that 1 point and see if your runner runs. You might be inclined to take profit at the high or leave it to run here because I said it's probably going to go there, but we're getting now after that fifth. It's what I counted there is something called the Wolfe wave. Wolfe waves are not thought in the Brooks price action. And you don't need to know that. Wedges are what you need to know. It's the same thing. I'm just counting, okay? First pullback, second pullback, and a third push, and no bear close. Now we're making a higher low, right? I just found my projected target, but really this is the target. This is what you learned in the Brooks price action course. You need to learn these patterns and where the targets are. Okay, so this is where the bulls want to go, but it's a limit order market. So it's better to buy with a limit order or better to sell with a limit order. So that's why I said limit orders are right here stacked. Several got price points got activated, and then bulls now started to make money. So if I wasn't talking, here's how I would have probably sold above this, made 2 points. Below this, made maybe 2 points, I don't know. If I actually bought, oh yeah, I would have made 2 points there. And again, I would have probably sold there, made money. I probably would buy underneath this, made money. It would go up and then come back down, but I would have made money. I would have not bought that, but even if I did, I would have made money. But then I see this finally, no continuation. I would have probably bought underneath and made money. So that requires a lot of attention to what I'm doing, and that requires me not talking, period. And literally trading with ATM orders. Get in, get out, get in, get out, get in, get out. Done. Selling above things, like I said, there are probably sellers above that bar 11, but if that bar 12 closes bullish, they will probably going to try to continue. But at this point, I'm scalped out. I'm done. I don't care. Unless you wait for the bar to close, you get a good signal, the bar is closing on its high and taking out the prior bar's high, chances are it'll get continuation. But at this point, I'm flat. I'm waiting for the confirmation if I want to buy again and scalp at 38.76. It may not go there because we're still in a limit order. So take a look at some charts here, right? So gap down, sold, 2 legs, gap down, pulled back, sold. Now, we don't have this bar, okay? Now, bar 12 is a really nice bar, isn't it? But it's still limit order market, so the machines are doing what they do best, sell anything that closes very bullish. Now, they can scalp whatever helps the ATR. So ATR is 7 3/4. So they could get maybe 3.5 points, maybe, okay, or a little bit more. So if you actually sold here, that's about for an extra tick or more. Now it's almost 8 for an extra tick. Okay, just about right. Right. So if there are no sellers enter the market, this can suddenly find buyers and we could go back up here. Okay. So all depending on what's there. Now, similar to this, they're trying to get back up, okay, to here, but I don't know. At this point, this is what I'm interested. Can this be us? We don't have this bar, okay? We have a limit order market. No consecutive bull bars either. So bears are still trying to get a runner for their sell of close of bar 12. If they see that their runner is not running and there are no more sell orders to test the low of bar 12, then they could get out and then we could end up seeing this bar closing maybe up here and then another bull bar to go up. But I don't see that yet. So, okay, we just have to wait for this bar to close. There's still 2.5 minutes. This bar to close. There's still 2.5 minutes. I still would like price to come down to 38.60 or 59 area, but now I'm not that excited about it due to bar 12. So now you have inside, outside, inside, breakout mode. You got bar 11 inside, bar 12 outside, and you got another inside. So it's going to break out higher this bar close on its, range. we could end up getting that bull breakout finally. Or if it closes down here, we're going to continue to come down. So then 60, 59 area, maybe even down to 55 is still doable for bears. I didn't buy 12, I wanted to, but then I started looking, wait a minute, if I buy this is still a limit order market. Would they sell? Do I really want to be stuck here with the stop here or there? No. But it's an outside up bar, okay, so, and it closed on its side, so I just have to give some room to bears, to limit order bears, to sell and scalp and get out of the way. If they can close this bar 13 on its high as weak bearish possible, then yes, bulls can come in and go test the 38.76. But if I don't see that bar closing 13, then there will be no buy to close or buy above. Now, it's still limit order market. When this bar closes in 20 seconds, bulls might buy to close scalp, just like they did with bar 12, sell the close and scalp. So it's still unclear. It's very difficult to trade. But we do have a wedge. Okay. Now, if you actually put a line, what did I say earlier? If you paid any attention, this is the third push, right? So if you put a line here, we have the first bull bar closed above. Okay, here is bar 12. And now we're pulling back and testing, okay, this area. You need the second entry long. But if bears break that, we're going to get a measured move down, possibly. So you do not want bears to break this. You want another bull bar closing above this to get back up here. Because there's a wedge here. Remember that box that I put in? Right? So I have a first one closed above, but it's a limit order market. Wait for a pullback. See if we're going to get the second entry long. Limit order buyers are looking for a pullback into that area to buy. They're buying, but they're not able to find more buyers. They need to be able to close the bar above here. So I'm not interested in buying. Because if bears print a bear bar underneath, we're coming down to the 60 and 59 area. Now watch. Right, so this is how I know when things are gonna go haywire or they're going to fail, that I cannot buy this messy wedge here. Because we are still in this. Okay, if I want this to be bullish, I do not want to see bear bars closing underneath 62.50. Okay, it should have been like this. This is coming down testing and another bull bar closing, and then we would go up. Since I don't see it, where do you think this is going? It's coming down. So where is it going? Well, that's the earliest target. Heck, it can actually come down to here and then even to here. So that would actually give me probably additional 5. Nope, that's more than 5. So I'm going to go with this. Maybe. So can the bears push this down? They need to close that bar below 62.50 to continue. They already came down and tested my target zone, bears. I said somewhere around 60 to 59.50 or 59, I said. Well, look what they're tested, 59. Okay, so good for the bears. But now it'll be a lot better for the bears if they can actually now close that body down here. Then this wedge fails, right? So I'm going to get rid of that. So you want to see a bear body down here to get this measured move. You want to see it close down here for continuation. open of the week. We have open of the week right here. I'll measure that and put it right there. It's right around there. Okay. That's also a magnet, right? So look what's happening with today. Bears need to close that body below 62.50 to activate more selling. Low of yesterday, open of the week, and possible measured move. It's right there. But there's now a bigger wedge, right? So down, up, down, up. So we have a wedge now. It's like that. So now, if we cannot get that, let me get rid of this for a minute. If we cannot get that bear body, what do you think is going to happen? Bulls are going to try to close a bull body above 69.50, and then it might come back down and test it. Finally, we could get that swing if they want to buy, because bears already finished the job. That 60 to 59 price point was where I thought that we were going to test. I mean, it took so long to get there, but we got there. So now, if I want to buy this, okay, I do see a wedge, 1, pull back, 2, pull back, and 3. I would like to see bulls start to close above 69.50, okay, but I don't know if they're going to be able to do it. It might still come down. Bar 14 is a strong, it's not strong, but it's a big range, right? And we're smack in the middle of it. We opened up as an inside bar. Now, up until now, we did not have an inside bar. I don't even know if this is going to be an inside, but right now, it looks like an inside bar. Could be that reversal. Now, if we do close about 69.50, that's going to be the first breakout from this wedge. But again, I'd like to see come back and test and then buy, if I'm going to buy. So the goal is to get back above 69.50 and close, and go test these equal highs and maybe even 4 high and get to the EMA. All right, so sell from the open or trend from the open is not yielding anything. You can see, right? We couldn't even get to the low of yesterday. Now look at the Globex chart. So we need to start closing above 75.25 area and then keep going back up to the Globex low. But if you buy 1 tick above 14, again, think about it. You are buying the first entry long because market made a new low. That's your first entry long. ATR is almost 9, 8 points and 3/4. So, okay, so you can go for more than a 1 point scalp, but you don't know if this is going to go because this is the first breakout. You at least want this body to close above 39.69.50. Okay, so if you do buy above it, you're looking for, you want to see a 5 point, but it's a bear bar. So if you measure 1 tick above 14 and you want to see a 5 point scalp, we did not get that. You'll get it if this bar closes above 69.50, but we don't know that yet. So 50, but we don't know that yet. So it's a tough morning. I hate these mornings. It's just like, can we just get a trend once in a while? Can the bears sell this? Well, right now we're trying to get back up. So bears tried again, keep failing. We now have a wedge. We're probably going to get back to the EMA, or at least to where I marked earlier. So this is still the target. Now, bears want to keep the gap open. Now, can this sell still into the low of yesterday? Yes, it can, but bears are showing you this is just maybe too low to sell. It's better to sell at the highs. So we could test it, but if we actually fail to test the EMA and leave the gap open, we could still come back down. Okay, so I'm still about bears, because I think bears want to get back down to open of the week. Okay, so we do have a bull bar close, but it's still a limit order market. You know what that means. You know, bears will sell anything that they see bullish, but they sold, but they couldn't break out. They sold, but they couldn't break out, right? That breakout was weak, so we know bulls are going to want to go back up to probably here, like I said earlier. And then it's test of the EMA. Now, bulls need a second bar. They're coming back and testing. Okay, this is the pullback. You're in a limit order market. It's a pullback. So bulls want the second bull bar closing above 69.50 to get back to the 76. Still dangerous, but bulls started to print some good bull bars. Okay. See if we can get to that 38.76. That would be really nice. 76. That would be really nice. $38.76. There will be a lot of scalping, but EMA is right there. This is dangerous because they sold here. There's a breakout test area, another one. So bulls really need to close on the Globex chart above 75.25 to at least to get back up here if they're going to sell again. We tested last hour's low. Now, if bulls really want to take over and get back to the EMA on the 1 hour chart, like they need to show us some bullishness. But at least if you are long, you're going to want to scalp around here because sellers are probably waiting there because of bar 2, and they could sell. Okay, especially the 1/3 top of bar 2 is a sell zone. Okay, right around open of the day tick price. So I want to see bulls at least get to the 75 or 76. But it's a limit order market. It's just struggling. We need that bull close above 69.50. So beyond 38.76, we could go all the way up to 79 to 79.50 before seeing sellers. So see if they can extend this further up. 77.50, 79.50. So the first, they're going to scalp at 76. We already know that. So if you want to take profit there, be my guest. We could make a double top there with bar 9 high. And if bears want to keep that gap to the EMA, they will try right there. But the bulls want to keep going up because it's nice, but we could still come back down here, pull back. So be aware of that. So the first scalp is 76. We could continue to go up to 79.50, and then the sellers will be heavily waiting there. So I bought this because that bar 16 was beautiful. That's what I was waiting for. Okay, so we just overshot my first target, 76, and then we tested the EMA. So good for the bulls. So I'm going to scalp this. See, if I wasn't talking, I would have made $300 with single contract. But I was talking, and then I saw a message came in. So I got distracted, and it ended up with a $200. I'll wait when that happens. Darn it. But, you know, beggars can't be choosers. So I am $535.36 up. So just want to show you guys. I am trading this. I just only traded 3 times since the open. So that's Sim and that's my actual account. So I'm doing okay with everything I read here. You know, I'm a little bit seldom taking, but this was, if I wasn't taking, I would have been a lot, this would have been a lot more than that. But, you know, it's trying to get to the 79.50, guys. It's probably going to overshoot it at maybe 80, but I would take profit at 79.25 or 79.50 latest. Sellers are waiting there. Now, open of the day is magnet. Maybe we would go there. I'm no longer interested in that. Okay, so this is where I would seriously start thinking of taking profit. 79.50. Look, if we do get above 38.84 area or like above bar 2, you can always buy the pullback and look for a measured move up, okay, from the structure breakout to the EMA possibly. But you do want to pay yourself here. So we just tested 79.50, and immediately that upper wick forms. Okay, bar hasn't closed yet, so they're still pushing. It might overshoot because ATR is almost 8 points. Anytime ATR is more than 5, it overshoots my targets. We know that, but don't trust that. Okay. Machines know and they calculate the way that I calculate, because I calculate the way they calculate, or at least I try to get close to it. So they're going to take profit at the 79.50. How do I know that? I'm going to teach you guys something very quickly. Okay, so it's super. Remember I said there's an inside bar here? Which bar are we stuck in? Bar 12, right? So bar 12 is your outside bar, is AKA as known as mother bar. That's what I do. Very simple. Did the bears break out and close the bear body outside of the mother bar's range? Nope. They did break out, and that was a breakout mode, inside, outside, inside, 11, 12, 13. They did break out, but where is the bear body if they wanted to continue to come down to here? They failed. So what does that mean? That means we've got a wedge and the bears are failing. I can exploit this. I can buy one tick above that, inside that range. I'm going to take profit there. I'm going to take profit there, but this is where I'm going to take profit. Now, I know you guys don't like to use Fibonacci levels. I'm probably going to get yelled at, but I'm going to show it to you anyway, okay? Because to me, this is an extremely great, if I know the targets, see, one tick below that, that's not truly 75, but say 75, I take profit one tick below that. Machines know that because it's better to take early profit, and that's why I said 79.50 take profit. I'm not making this stuff up. This is how I trade. And you already knew that this is a breakout mode, but bears are failing and failing and failing. Finally, we have a beautiful bar, and I pointed out we finally have an inside bar. Finally, we have 2 bars. That's great, right? Bears failed here, bears failed here. Finally, 2 bars. But bar closed on its low, so the breakout is going to be to the downside. We know that. Okay, that's great. You could have also measured that and figured that out. If you actually sold it, you measure the mother bar, right? You could have taken profit very quickly here, and you don't see a bear bar closing below, just get out. This could just go right back up, right? They couldn't even get to the actual target. That's why it's in dash. That's why this is the actual target breakout from those IOI levels. Okay? I like to measure. I'm a little bit of control freak. I like to know where my targets are, because trading is one thing. Opening a trade is one thing. That's basically one half of trading, but the rest, you got to know your targets, at least get close to them. So once I see a weakness, I can exploit this, maybe 50% of that inside, the outside bar is 50%. Maybe I can buy and then maybe take profit at a nearest magnet, or if I can measure, get closer to those targets and be done with it. So. No, because bar 10 went one tick below bar 9, so it's not a mother bar. But listen, rules are rules, but, oops, sorry. I mean, you could say it's the same thing inside, outside, inside, except it's not a true inside bar. So it's not a true IOI, okay? It kind of did break out one tick and it failed and just went right back to the 50%. But where are the consecutive bull closes? There's only one, and it failed and came right back and probably claimed the target. But still, there is no, you see that right there? Where is the bear close bar? I don't see it. 14 didn't close, so that's a great clue right there. Bulls are coming in, and then I see a wedge. Perfect. And that's when I said, okay, I am done with selling this because we already met my target, and that was 60 or 59. I said 38, 60, and 50. Bears already got that objective done, and no bear closes below that if you take this IOI. So we're probably going to test the O midpoint, and if we start to close above it, oh yeah, we're going up for sure. So you can also read that, but that's not a true mother bar. This one is. It has to contain an inside bar. So to me, this was a better IOI, failure, fake breakout, and a reversal. So that was I waited for that. Okay, so I did scalp here very quickly, but this was my third trade. So I've been waiting for this. Now, if I wasn't talking, I would have probably had $1,000 by now. But because I'm talking, I entered with one contract just in case. And I stopped trading with my prop firm account while I managed. You guys know what happened a couple of weeks ago. I do not want to repeat that ever again. So I trade my prop firm accounts on the afternoons when I'm not talking, but I'm able to post charts in the Discord so you can follow along and my targets and all that. But I will trade a small account with single contract as I'm talking here so that I can walk to walk, right? Or is that walk to talk? Talk to walk? I don't know. All right, so here we are at an EMA, right? Beautiful 1, 2, 3, 4 bars, but look at the bars, okay? Look how they're opening and closing. Pretty strong, isn't it? Now, can we get back up to the open of the day? Well, yes, but bar 2, I said, is problematic, right? So the 1/3 from the top is a sell zone. So we already tested it, came down, but no bear bar closing, so we're still strong. Now, we could go back in and test here. So open of the day is probably the target. Bulls are trying to get above the open of the day to become a lot more bullish. But don't discount this area. That bar 2 is a strong bear close and got actually several weak legs down. So there's still probably sellers waiting there. Okay, so be careful. Now, if we start to close bull bars above open of the day and high of the day, then we're going to become a lot more bullish, and I would look for a measured move target to the upside. But I'm looking for always in long, Now, bar 18. Let's talk about bar 18. Now, what's the range? It's only 25 points. This is great because we can double this. If bulls get serious here, we can double this and go up. Sorry. We can go up to here. It's possible. But like I said, this is resistance, okay? Take that. Okay, just about. I'm going to take that high and maybe 1/3 right there. So that's the first rejection. That's the second rejection, right? So I warned you about that. And if you wanted to sell it, where would be the limit order sellers waiting? Who will tell me? Where would you put your limit order sell? If you wanted to sell this and you knew that this is, okay, this is actually, she said that this is resistance, they're going to try to sell. Where would you enter to get a couple of points, scalp? Which bar? I taught you guys this several occasions. They did it right here. It's right in front of you. If you wanted to enter with a limit order, which is risky because you're selling against 1, 2, 3, 4 bars, it would be one tick above 18, okay? So you would put, it would start, the limit order sales would start here all the way to maybe a couple of ticks above this bar side, but really bar 18, right? So, because you're right in that sell zone, and I said they're going to sell. They're going to try to sell. They sold here, and we couldn't go above bar 17 high. So we know limit order sellers are waiting there. Why? Because 17 and 18 are overlapping. Make sense? So they're scalping now, but you're selling against 1, 2, 3, 4 bull bars. So you know there are limit order buyers probably underneath bar 18 and a strong open right there. Okay? So there will be buy orders right there, all the way down here, maybe even underneath bar 17. So now we have another inside bar and an outside bar. So the bar 17 is an outside bar, bar 18 is an inside bar, right? So now we have OIO, right? And the bar 19 is an outside bar. So I see another breakout mode. So I'm going to wait because it's also the 18 bar range, and the range is just about 27, 26 points. So it can double or triple in length. So we're going to get some kind of breakout. Can the bulls actually buy this and break out to the upside? 20 EMA from 1 hour chart is right there. We've got a magnet there. Hold on, I don't know what that is. Yep, it is. So that's this right here. Now, limit order buyers are buying, and they're hoping to go test these highs and possibly break out and get a measured move to the upside. I'm going to wait for this bar to close because this is the second sell. Bears did close a strong bear bar, but it's not that strong. So they're looking for a better sell or some kind of continuation. Now, 3, 4 bars now overlapping. It's still a limit order. I didn't sell below 18 because it's a bull bar. If I were to sell, I would have sold above 18 and scalped it underneath 18 and be done with it. Now, always in long, we do have bar 18 closed above it, but where's the second bar? Where's a bar that opens above 18 and closes above 18? I don't have it. So this is still sell zone reaction to the sell zone by bears. But market is trying to become bullish. It needs to try harder. Now, for bulls, the targets are 81 and 84. Okay, so they're trying to, if they can close this bar bullish, they're going to try to get the 81, and then they're going to try to get the 84. Bears see a micro double top, but it's the 18th bar. Market is trying to break out, and you can't sell against this bull leg. It's very strong, so the best thing to do, either flat or go long. Now 81, you do want to scalp at 81. We just tested, good for the bulls. 84 or 83.75. I'd say 83.75 or maybe 83.50. Just take your profit. If you are still long, because this is a double top, the bears want to sell. We're also at the Globex low testing. This was a breakout point. Remember, we're doing a breakout test now, and we're testing a moving average, which is VWAP, and we have been very bearish underneath. So there might be bears there wanting to sell. So the first target was 81. We're kind of overshot it due to ATR being above 5. So I told you guys, every time I have, targets, we're going to overshoot them. But really 84 or 83.75 or as early as 83.50 should be your scalp. So we're still bullish. Here comes 84. Okay, we just tested 84 and immediately it came down. So good job, bulls. Anyone traded this? This was beautiful. I mean, if I didn't leave my trade, I would have been probably still in this, pushing towards higher. Oh, you're still in it. There you go. Now, where can this go? It's probably trying to test the 85, 38.85, but it can overshoot. The problem here is that I think there might be sellers above here. Maybe around 85.25 area. Even if it overshoots the 86, 87, there might be sellers. I'm going to take a quick break. Be right back. Put myself on mute. Okay, we still haven't broken above this resistance, but we do have now another really strong bull bar above the EMA, closed, but it is the second leg. So now, can we actually come back and buy this? Sure. Look what's happening here. We have higher low, lower low, higher low, another higher low coming back. We might get some buyers at the EMA. Where can we go if we become a lot more bullish? The first 86, 38, 86. Okay, so if we do start to punch above it, we will continue to go up to about 92, 38, 92 area. But ultimately, bulls are trying to get to the 39.03. So if you want to mark your charts. Okay, so we do have a trading range. Okay, trading range highs, trading range lows. Now, can we come down to the 50% and test it? We have been gapping down. So this is the first, okay, strong move above the EMA. May result in some kind of stronger pullback here still. Okay, so, but I think that bulls are going to try to go further up. Now, breakout point, we've tested it. It's still bearish. They might sell. What if we come all the way down here? Is it possible? Well, it is possible. But, so if I actually, let me see, this is still the high. If I measure this range, okay, so this is the 50% right here, right? Bulls are trying to get up to here and here. Now, what if we pull back all the way down here? We may not. We can actually pull back to here and then find buyers and go. But what if we pull back down here? That's fine. There probably buyers are there as well. There's a small trading range there. area of agreement, and breakout point, some kind of cup, and maybe a handle. But this resistance is still holding. So bar 20 is a breakout, but breakout failed. So now we pull back. We're pulling back to 1/3 of this trading range, which is 76.25. Some buy orders are activated there. That's why it's bouncing. But can we pull all the way down to the 50%, 38.72? We can. But you're going to get first defense buyers here first. And it's the pullback. And if we start to close above EMA, we're probably going to go back up to 91, possibly 3,900. But let's see. There's a wedge. Maybe. Pull back, and pull back. So machines are trying to sell this, but if we start to close bull bars above bar 20 high, then we have a potential measured move target all the way up here. Okay, so I could already measure it. So if I can measure from there, that would be just about my target. I said 3,975. This is 3,902. Okay, so that is the measured move. We're bouncing. I explained to you why we were bouncing here. I measured this range and a pullback, and that was the 1/3 from the top pulling back. Bar 22 is a good, strong bear close. It's a follow-through bar for those who actually sold one tick underneath 21 due to failure to break out and continuation with bar 20. So they might want to get 5 to 10 points scalped there. So if you actually sold here, so that's a 4, 5 point is right there. So bears are still gunning for that is 5 point scalp. Okay, so you have to always read both sides, what they're doing, where they're trying to go. Now, do you also see the inside bar? Bar 21 is an inside bar, right? So we're stuck inside of bar 20. Big range. No breakout from the top of the 20. So, but we're still stuck in it. We're going to break out somehow. It's also, let me get this out of the way. You kind of got the 5 point where it is. You kind of, I'll leave it there. Measured move target. We're still 1/3 pullback area, 76.25, still holding. Now, for bears, this is the first sell. Remember, if you have a wedge here, 1, 2, and 3, right? You want to see maybe bears break this low, 20, and keep selling, okay? But when you're stuck like this, I don't generally take that, so I'm going to take this, okay? Bar 21. So you see we have a bar close 22. That's the first sell. Now, we could go back up, okay, and try to sell with a second sell into these levels. So that would be 5 point, and that would be around 10 point area. So the bears are still trying to sell this. I'm not ready to buy. I need to see a good high 1, high 2, right? So all I know is that 22 is the sell because there were sell orders underneath 21, but bears really couldn't make that 5 point scalp yet. They need to come down and test 74.75. What if they can't? Then we pull back, and if we get a really strong bull bar closing above the high of 21, then we have a wedge failure, okay, and we have a breakout, then I would look for the measured move target. So right now, these bears are scalping by selling this wedge. Now, they really want to actually come down and test these lows. That's where they want to test. Why? Because if the wedge pushes where those pushes begin, first push, second push, third push, if you're selling into these levels. Now, when would you give up? When would you give up selling? When you start to see big bull bars and taking out the highs, you're done. We're never going to probably come down to those levels again. So they're still trying. That was the first sell. They're probably going to want to get the second sell. But if the second sell activates and then fails, bulls are going to come in. That's going to be your second entry long. So bulls are trying to get a first entry long. High one. But it's not truly high one. The bar hasn't closed yet, so we don't know. We're still in the sell under 21. I don't have a strong breakout follow through. I'm going to get rid of this measured move for now. Okay, because bears are still selling. They need to make that 5 point. They're still trying to get to that 5 point. I think that was 74.75. They need to make 21 ticks. So that's a 5 point is 20 and an extra tick. So they need to make 21 ticks to get a solid 5 point scalp. Still nothing. Limit order buyers bought right underneath. Remember, when it's like this, the market is coming from. So they bought it. But I'm not going to touch it because it's 3 bear bars. If the bulls actually do close a strong bull bar, then they get their high 1, right? And then possibly high 2 could swing higher. But I don't have it yet. So this is where I need to be patient. I can't just jump in every time I see a bear bar is a weak close. It can still get continuation. I don't want to be stuck in that. All I know is that this area, okay, let me get rid of that for a minute. We sold it. We could still go back up. All I know is that the bears are still selling and they haven't made their 5 point. If you're counting from down here, right, so this is your high 1, this is your high 2, this would be your high 3. So many different ways to count. I just make it very easy. Did we make a new high? Yes. Are we in some kind of bullish move? Yes. Did the bears try to sell with 2 legs? Yes. Could this be a high 1? Possible. If we close above 38.80 with a bull bar, high 1 will be activated. In fact, its low is lower than the prior bar's low. That becomes a signal bar and a trigger bar. So it has a potential of going up now. So you don't need to wait for second entry long as long as it closes really strong up here. But if it doesn't, I'm not touching, right? So everything's about bars, how they open and close, where they open and close. I want to buy, but they need to show me. Testing low of 23 is trapping the bears with the second leg. Then the closing above bar 23 is now activating the buy orders above bar 23. So bulls win. But it's still first entry, and the bears didn't get their 5 point. So there's still 1.5 minutes almost. I just need to wait. We have an outside up bar. Could this be a double bottom bull flag? Yes. Kind of got the point. I'm going to get rid of this. 74.75 is the 5 point for bears, but they kind of failed. So could this be a bull flag? Yes. Micro double bottom. If this bar closes right here, more bulls will probably jump in. Now, what's happening here is that the sellers are trying to get the second entry sell. This is the first entry. Test. If they do close this now bearish, they can sell. But this now, at the end of the 14 seconds, that needs to close really bearish down here. Okay? See, that's what they're trying to do. They're trying to get, okay, that pullback and sell. So there's a lot of trapping going on here. So now we have IOI once again. OIO, IOI. So breakout mode coming. But would you sell this? Probably not. I'm not going to sell this because this is technically first entry long. Okay? If that bar 24 were to close down here, I would have said, oh yeah, we're going to come down now. That second leg is going to extend down here. We didn't. So now bulls are trying to get the second entry long. They need to close a bull bar above 38.80 to seal the deal. And then they would end up going up to possibly 86.25. They might go, but they need to close this bar above 80 first. Can the bears sell? They still can't sell this. They just need to close this bar really strongly bearish. I don't see a second sell. This 24 breaching below 23 ended up being technically a second sell, but close on its side. So that's a trap for bears. Bears got trapped there. So bears now selling the highs to trap out. Okay, so where's the best place to sell? Right there. They're trying to prevent from also bulls from closing above 80 to go further up high, because as soon as they close a bull body above 80, okay, they're going to try to test the high of that. Why? Because that's the last bar pushed higher. 1, 2, 3. So basically there's a box there. First sell, pull back. Bears are still trying to get their second sell. Now, if I want to sell it, I would want this bar 25 to close really bearish and give me an actual second sell signal to swing this down. I don't see it. I don't see it. So for me to second sell, I would need a bear body. Okay. I'm going to have a little demonstration like that. Okay, so I would want to have a bear body like this to be like closing here, maybe with wicks, okay? Maybe right here, like that. But I want to see a body. Then I would sell, and I would probably want to come down to that 50% or whatever, maybe down even here. So bulls are still trying to get that always in long, but bears have 2 bars also closed below EMA, so they're trying to stay always in short. So there's a hell of a fight going on here. Okay, so I don't have that. I'm just going to leave them there. Okay, so bears are trying to get that second entry short now. Now this is a pullback. If they do succeed, that's good for the bears. But remember, there's a support here. Now, can the market sell today? Continue to sell. Well, look what's happening at the EMA. Now, I want to show you something, okay, that just pay attention. And you have heard L actually point this out. Although it's not the perfect setup, but look at the EMA, 1 hour EMA and a 20 EMA. It's going parallel to one another. Do you see that? So when you see this, okay, and we're also below, 20 EMA is below the 1 hour EMA, so we're bearish. So the market is selling anything they see bullish at and above the EMA. But there's nothing bearish there yet, right? So like I said, I would need, if I want to sell this, I want to see some kind of bear body closing below the 24. Okay, I don't see it yet. That's what I want to see. See, where is it? Technically, it is the second sell, but it is a really weak, very weak. Look at that. Bunch of bars going sideways. There's a micro double bottom with 22 and 20, I guess 22 and 25, but it's really weird. It's not that really a micro double bottom, it's double bottom. Or you could say maybe double bottom with 20 and 25. So I don't know what's going on here. Right now, market hasn't decided. I think it's trying to become bullish and close above 38.80 because this double top presents us a possible big cup, small cup, breakout, and measured move. So if the bears are failing to sell second time here, even though they pulled back to the 38.80, why? This is the box, okay? They're always going to try to sell until they can no longer sell. I don't see it. So first sell, they're still trying to get the second sell. I have to wait. If bar 26 now closes like that, that's a second sell. But they're selling into support. Breakout, support. Breakout, pull back. Breakout, failed breakout, but that's still support. Now I see a small head and shoulders pattern. Therefore, neckline, they're trying to still sell it. So now bears are trying to take over. All right, there's still 3 minutes. Can they actually break out and swing this all the way down here? I don't know. They might, or they're going to fail right around here. And then we're going to find bulls because that's kind of a wedge. Down on this, up on this, down on this, might go, or I'm counting this totally wrong because of this bar 25. Down, up, down, and up again. So that's the third push now. Technically, this is the third push. So that means this is a potential of becoming a wedge bull flag. Last second, and I don't want to scramble if I sell this thinking this is the second sell. I don't know that yet. The bar hasn't closed. I don't see a good bear body to sell. This is now, I think, might be becoming a wedge bull flag, even though I see head and shoulders, but I don't trust that head and shoulders. Market is trying to decide here. It can go up or it can swing down. If bulls will show up, we can actually end up getting a nice swing all the way to up here, midnight open. So I'm going to be done soon with my session, but I still have to trade. I will trade what's in front of me. I haven't looked at the encyclopedia, so let me take a look to see if I can find something. Okay, so here it is. There's one right here. So we have a double top, came down, went up 2 legs, 1, pull back 2. We're at the EMA, right? So bears are trying to sell. That was the support, bounced a little bit, but they did come down a little bit to this high. So bar 14, if we do pull back to bar 14, we might end up somewhere above bar 14 or around. We might still go back up to EMA. Okay, so that would be the bull flag, pull back, higher low, and then we might go further up remainder of the day. So I see why I'm hesitating to sell this. I just don't see a good bear bar closing just yet. I mean, they had better chance of selling here. Look at those bear bars, right? So if I actually demonstrate, right? So there's a wedge. Which bar is the biggest bar? That bar and the low. Where did they sell? Look, first sell is this bar. Pulls back and sells again. But where's the continuation? They finally get a continuation. But somewhere here, they test and the buyers show up. Why? Because we have a wedge here, right? So now, what am I looking for? I'm looking for bull bars. What is the last bar that made the third push down? This bar. Do we have bull close? Yes, first bull close. If you buy one tick above it, you're kind of buying into this trading range. But third bull bar, strong. That's a bullish pressure. Buy that. It goes up somewhere here. Underneath that bar, you may want to take profit. It's going to come down, but look, first push, pull back, second push, pull back, third push, wedge, bull flag, and then it's a breakout. So we might have a similar situation here, okay? I love these encyclopedias. It just makes life so much easier. I'm not saying this to sell it. I am using it. I'm a big believer. And I study it all the time. I have a regimen. I go in and it's on the weekends when I'm tired of talking to my boyfriend. Like, I open it up and I go through. If we gap down, what are the scenarios? If we gap up, what are the scenarios? Okay. If we are a trading range open and the market goes about 7 to 12 bars, remember what Brad writes. Okay. In the blog every day, just wait for 12 bars. It's okay to wait for it. That's the first hour. And then see what market does at the end of the first hour, right? Are you at some kind of support? Are you at some kind of resistance, right? And or wait until 18 bars and see if you can get a nice 18 bar reversal at some support and resistance, or continuation breakout for a measured move target. So I think one thing that we should do on Encyclopedia, that maybe we should add the hourly bars labels. I'm going to make the suggestion, but I don't know if they're going to actually care for it. I think it would be really helpful, instead of counting the bars, we would see the bar 1, 12, it's 24, 36, whatever. So it really makes sense to me, just looking to see what the market is doing. There's a whole section dedicated to hourly bars, how to trade them, how to read them in the course. Go study that. It'll change the way you look at things. But really, the encyclopedia will give you the same price action over and over and over, and every scenario is marked on there. So you're basically taking the guessing game out. And market did before many times, it'll probably going to do the same thing. So what do I have here? Down, up, another down. I don't see a bull close yet. Bears are trying to break below bar 20 low. Why? Because all of these bars, all these 7 bars are stuck inside the range of bar 24. If they do close a bear bar, then that's fine. Then the targets are there. If I measure, we might end up coming down here or test right there. So if I actually measure it, you'll see. Okay. We have not broken the range from the bottom. We can still trap the bears here, make a micro double bottom, and then go. But if we do break a bear bar, shallow target, but this is the target I'm interested. And that is slightly below the bar 14 low. So the bears might be still wanting to get that. Now, I want to point out something. Those who sold, regardless of anything that I'm showing, those who sold underneath bar 21, did they get their 5 point? Yes, sir, they have. That was right there. Look at that. Not only they got their 5-point, they got extra couple of ticks. Okay, and everybody filled there. So everybody scalped a nice 5-point. Is this enough for bear to get out of the market? Well, we'll know with bar 27. If the bar 27 ends up closing really bullish, then we're going to go up to 38.80. And then if we do close above a bull bar, then we would go test the high of 21 and then probably break out. So we don't have a good strong bull close, but you can see that these people are taking profit. That was a profit taking bar 27. So now if we do get a second entry long, first entry long, maybe we're trying to get the second entry long. You're going to see bulls get serious about breaking out if they do close a bull bar above 38.80. What if they can't and the bar 28 ends up closing a bear bar? Then we're coming down and test the 14 high. But right now, these bears took profit, got out of the market. As they exit out, okay, as they exit out, and as you start to see more bull bars, you better believe it, the bulls want to go back and test the high. But we need the second bull bar close higher, not lower. And you sure don't want to see bar 28 close bearish. If it does close bearish, then we're not done yet. We could still push further down. Maybe to here, further down here, right? Because we're still in a trading range. Bears are still trying to keep it bearish. We're going parallel to one another. Now, we know what happens to the strong bull bars above the EMA when both EMAs are parallel, right? So you do want to sell a strong bull bar. What happens when you get a strong bear bar? You buy. So say you got a strong bear bar like that, right? Chances are they're going to buy it and go right back above the EMA again. I don't have that yet. So all I see here is some kind of a bull flag. And the bulls are trying to print this bar as bullish as possible to get to the 38.80 and close above it. But I don't know. It's a bunch of sideway bars, limit order market. Now, what do I see here? Inside bar, right? So another inside bar. We're now stuck inside 26, but really that's not the one I'm interested in. I'm interested in 20. Bears got trapped at the low of 20, no breakout. So the bulls are now trying to take over because they see a wedge. Okay? Good for the bulls. And if they close that bar above 38.80, that's even better. They're trying to get to the 38.84 and close above it. And use that as a stepping stone. Use this area as support to get to up here and get a measured move target. It's tough. Would have been a lot more easier if 1 hour EMA was below 20 EMA, 5-minute 20 EMA. Bears want to double top and sell because they see a bear flag. But you see how it's becoming bullish? Bears got their 5-point. They're no longer interested in the 10-point. And now bulls are making their 5-point. Okay? So bulls want to now test the high of bar 21. But they need to keep closing bull bars. Okay? And not fail here suddenly. Target is the high of bar 20, the mother bar's high. If bulls break out and close a bull bar, chances are they're going to try to push towards 38.84, 38.90, and possibly 91. Now, are we always in long? Well, according to here, this looks really nice, doesn't it? Yes, kind of. I mean, it's in the middle, right? I want to be true to what I'm reading here. So if I tell you we are always in long, then I'm lying because I don't have 2 consecutive bull bars above the EMA. These are not consecutive, but this is a good sign there's a lot more bullish pressure here than the bear, even though we are below the 1 hour EMA, okay? So my criteria, the way that I read 3880, I need a bull bar close above it, then have another one open, then yes, we're going higher. That means we could have a potential of measured move target. Remember I said earlier, bulls are probably going to want to test the 3902.75 or just around the 3903. That's where they want the swing. We're going to stop right there. If we do start to get bull bars, 3903 is where I'm going to scalp hard. Okay? But right now, I have 1 bar 28 closed above EMA and closed above 3880. But remember what I said about these bull bars at the EMA when they close above the EMA. When the EMAs are parallel, machines are going to sell anything they see bullish and wanting to sell again. Why? Because naturally we are bearish. We're in a bear market. We are below the 1 hour EMA. But we have a bar closed, yet another 28. So let the bears try to sell first. They're going to scalp with 29. But at the end of the bar closing, if it closes weak bearish or closes bullish, then that's it. All those bears are going to now exit out. And then we're going to go up here. So my targets are, obviously these are magnets, 3904, 3901. I said 3903. So I think we're going to go up here. Yes, bar 20 is mother bar. So if you actually measure, and if you want to get your scalp targets, this is how I measure it. I don't know if L is going to join us, but he may or he may not. So here, this would be my first scalp target. If I see a bull bar closing above it, this would be my second scalp target. If after they take profit, they close above it, this is 1 to 1. 1 to 1. That's it. It's very simple. I developed this long time ago. There it is. Woo-hoo. All right, let's get going. Don't collapse. Right there, 86. But this is a trading range highs, but this is cup and a small cup, and it was a pullback. Again, you know, we're trying to get a measured move target. If they close this bar strongly bullish, okay, we get a measured move. Look how close we got. It should go and test that 86.25. Machines will start to take profit one tick underneath 86. That's what I do. Because I know it's going to go there, and right before every other machine about to get profit taken, other machines, smart machines, will start to take profit one tick above, and they're going to scare everybody because it's going to look like it's collapsing back, only to go back up again. So first target, second target, 1 to 1 target. In between, I don't care much about those levels. They're there for other reasons, but don't worry about these. So I did say that we're going to go higher, and that's what we're doing. I like to see 91 tested. Good job, bulls. All right, so measured move target. I'm going to do that, and I'm going to leave. And if you want to stick around, Brad will come in. So I can take that, but the bar hasn't closed yet. You can either take that as your measured move, or you can take from here. It doesn't matter. It's just the same thing, really. But really, my first, you really want to take profit here, but we might continue up. So if I actually, so there's not much of a difference. So might as well just take that, okay? So if the bar 29 closes bullish, we should continue to go up. It's a beautiful breakout, but we don't know. Hopefully it will not collapse because this is a trading range after all. Okay, so there are probably sellers waiting 2, 5, or 10 point above these highs, okay? So there will be profit taken. I like to see bulls continue to get to 90 and 91 area and take profits as early as 89.75, one tick below the target, the second target from the mother bars breakout. So 89.75 to 90. So turns out to be a good day, huh? I mean, we learned a lot, hopefully. You know, I try to prove the point that this isn't that bearish, and I kind of gave up on these magnets. And once I start to see a lot of weakness, and my target was really the 60 or 59, and we tested the 59, and then we started to rotate, and I started to buy. Okay, so now my target is still 89.75 to 90, but continuation overshoot 91. You do want to take profit there because it'll come down. Why? Because we know this is a trading range highs and there are sellers waiting up here. If they're stuck here, they're going to want to sell and probably break even, but this is a beautiful breakout. And we got a nice bull gap. I want to see bulls pushing towards here. Now, can we actually accelerate and become really bullish the rest of the day? Well, 4,000 is your target. But for scalpers, I said 91 or 89.70. We just tested it. So if you scalp there, good job, everybody. I am done with my session. This can continue to go up to 91, perhaps to 94. That would be your measure target, okay, of mother bar breakout 1-to-1. Or you can hold it all the way to 93. I'm sorry, what am I saying? 93, 39.03, or magnet 04. But I think we're gonna come back because we're going far beyond the EMA. We need a pullback, and the buyers are probably going to be there. Now there's a wedge, possibly, or one pullback, two pullback, and we're going to have another wedge, and that's the one I want. That would give us a, you know, we would get closer to the vicinity of the measured move target. So I like to see if I can buy with a pullback. Can market go on and on and on and on and go test yesterday's high? Possible, right? So but we're in a trading range, okay? So be careful here. It's also double bottom, neckline, higher low. This is where the bulls want to go and break out. Can we do that? There's a much bigger measured move. But first we need to get back up here, close a bull bar, then your measured move will be like that, then your projected target would be up there. So we are in a much broader, okay, channel here, or trading range, however you look at it, bigger trading range, or here, if I can do this, let me show you what I mean by that. Okay, so let me add a little bit more days. That's 10, I'll add 30. Okay, so it just goes on and on and on, but I'm going to take this. Okay, so there's a channel. Look where we are. Look where we found support in this channel, right at the mid-level. Where do you think the bulls are trying to go? Close this gap, go and test here. Don't be surprised if you see bears wanting to sell at those highs and trap everybody with this, okay, humongous, okay, expanding triangle with an apex right there. So if we go up there, come back down and break this apex and then sell, we could end up coming all the way down. I didn't do a good job there, but you got the point here. So here, that was an overshoot. Maybe there we could sell, and then I don't know, but I think we would end up coming down to these levels, I would assume, if we're going to break down. But right now, we're far from that. Looks like we're trying to get back up to these levels. So good for the bulls, but there's a much bigger measured move. It's possible. Remember, 4,000 is always the magnet. So yeah, I mean, I'm going to assume at least we should test 39.03. That's what I want to see. Bars are getting smaller with upper wicks getting bigger. I don't like it, but it's still bullish. So if the bulls can surge here a little bit, 39.03 would be a great place to test. But first things first, these bulls are trying to get a 20 point. I'm going to measure from here. 20 point starts right there. 20 point is right there. So by the time we get here, we might actually collapse back down. So this can push all the way up here more. And I think it will. So right around here, if you want to hold on to your runner, you should have scalped it a little bit. So let's see if we can get to the 94.25. They're testing the 15. That's why this bar is coming down. Because if you measure, that's the 15. There's no bull body closed above the 15. Okay, so they're taking profit. But if they close a body above the high of 30, then they're going to get to the 20 point. Okay. The reason why you got that 31 is because you're at a 15 point. They're swinging that, so 20 point is doable. That's what I would think that they're going to. Okay. All right, so I am done with my session. Brad will come in. You guys have a good day. And I'll see you tomorrow morning.
Thank you, Rose, for the session. It's always nice listening to you. So overall, I do think we're going to pull back here. I agree with Rose. We broke to the upside. One thing you have to look at is there's a measured move target. Let me move this open of the day. Measured move target from the low of the day, bar 14 to the open, projecting up. It's far away, probably won't get there, but you have to wonder. And my only concern with this measured move target is the size of the opening range is fairly big, which lowers the probability that we'll get there. But you have to, it's reasonable enough. The September the 6th low is another target. If you look at the daily chart, let me move one thing over. Let me move the GoToWebinar screen out of the way. If you look right here, I've got a green box. This box is it's a gap. So we broke below the September the 6th low here, and we're testing back into it. We tested it yesterday. We're testing back into it today. That is this purple line area. So I do think we are going higher. My only question is, do we pull back first? Do we have to pull back to the 1 high, the 20 high? If we do, that will certainly disappoint the bulls. Strong enough breakout. We're always in long and probably are going higher. But the first question is, do we have to pull back? And we're testing back to the 60-minute moving average. We broke above it yesterday, sold off, testing it again today. So far, 36 and 37 is good for the bulls. Or excuse me, 30 and 31 is good for the bulls. Probably going higher by the close, but stop's far away. Where do you put your stop? Well, unfortunately, your stop, technically it goes below 26, maybe it goes below 29, but probably buyers below a bull bar, so buyers below 31. So you can see bulls are taking partial profits. Some bears, they sold the high of 20, maybe the high of bar 1 during 29, and they scaled them higher. So they're more than likely they're trying to get out break even. So they sold the 1 high, they sold the 20 high. Some bulls, as crazy as it sounds, maybe they sold the 29 close. And I mean bears, bears sold the 1 high, the 20 high. Some sold the 29 close and they scaled them higher. Maybe they sold 5 points higher. They're going to try and probably get out break even. The bulls know that, so the bulls are buying pullbacks. So you can buy here, but you're probably going to have to sit through at least a small pullback. Therefore, if you are buying, maybe the more ideal thing is probably traders are buying and using a wide stop and scaling in. But most importantly, if you are buying, you have to have a wide stop. We could easily pull back to the 1 high or the 20 high. So by the close, bar 30, what do traders do if, by the close, bar 31, what do traders do if this current bar is a disappointment bar and a bear bar? Well, if it closed on its low, some bulls, maybe they get out, possible wedge with 8, 20, and 32. But the reality is, this is a strong enough breakout. The first reversal down probably will fail. Therefore, some bulls scaling lower, some bulls trying to get out at the high close. We're probably going to have a second leg here. The bears, they see 2 legs up and the second leg trap. And bears sold the 20 high, the 1 high. They're trying to get out back to their original entry. And the reality is, they probably will be able to avoid a loss. So probably will pull back here. So tail on 32, but following 5 consecutive bull bars, probably buyers below. Some bulls disappointed will look to get out at the 31 close. Low probability swing short below 32. Not ideal after the consecutive bull bars. Bears probably need a second entry short. So far, the bulls have a micro channel. 7-bar bull micro channel, so probably the first reversal down will fail, and a little bit higher is likely. Yeah, Ethan, you can call it a wedge. 8, 20, and 32. The question is this strong enough to reset the count? It's also a bull breakout of a trading range. And you can call it a failed breakout of a double bottom, or a bull. You can call it an upside breakout of a double top. We had a double top here, and you can also argue the bulls tried to go down. We broke above the double top. So you have to wonder if we'll get a measured move up of this range. And again, the problem the bulls have is this range is already pretty big, and it's possible today could be an inside day. But we could easily rally up to here and then sell off around somewhere back over here and have an inside day. It's reasonable for the bulls. It's reasonable for the market to have an inside day today. Give me just 1 second. Testing the 29 close. Some bears sold 29, scaled in higher, getting out break even. Some bulls bought 29, knowing that 29 is climactic. Therefore, they scalped out and they're trying to buy again around 29. Tight enough channel or tight enough micro channel, first reversal down probably will fail, but the pullback could get all the way down to here or the 1 high. Bears are trying to close the gap. So there's breakout points here and here. May have to get back to the open of the day, but probably a second leg before we get down here. Bulls, you can see some bulls bought 31 close, scaled in lower, getting out break even. Back at the 31 close during this bar. You can see the other bulls bought the pullback of 32. So what do the bulls do that got out below 32 if this current bar closes on its high? They probably have to buy above this bull bar. Always in long, some traders get out below here, and if they do, they have to get long again above the bull bar closing on its high. So disappointing high one buy for the bulls, 33. Might be more sellers above, but with this micro channel, probably have to get above the 32 high. Some bears that sold below 32, disappointed 33, trying to get out with a small loss here, just in case the market breaks to the upside. Bears are trying hard to close the gaps. They're trying to get a close below 30. They're trying to get a close ultimately below the 20 high and the 1 high. However, probably buyers below and the second leg up first. Okay, this is what I was talking about. So we're getting a pullback, it looks like, before we get a second leg up. The bears want to completely reverse this. However, the reality is I think that's going to be fairly difficult for the bears to do without at least getting some kind of a second leg up. However, this is certainly damaging for the bulls and increase the odds that there will be sellers above 32 instead of buyers. Yeah, Cal Trader, I don't know if you can, if you're in the webinar, but you just go to the Brooks Trading course and click on the blogs. And there you can find all the daily blogs and weekend blogs. And as well as there's a Bitcoin weekend update. There's quite a few reports that people are writing that are pretty good. So tail on 34, close at the 33 low. So weakened the case for the bears. But this is, again, 3 consecutive bear bars, damaging for the bulls, but probably buyers below. However, the target for the bears is the 1 high and the 20 high. So with 3 consecutive bear bars, are we always in short? No. We have 2 bear bars closing below their midpoints, a 3-bar micro channel, good for the bears, but the bears, they really need to do more. They need to close the gap below 20. They need to close the gap below 1. And you have to ask, why are the bears not getting bear bars closing on their lows? You know, if the bears were truly strong, 34 would be closing on its low. 33 would be a bear bar closing on its low and not a doji. But the bulls, they are losing strength. And the further this goes down, the more interested the traders that bought up here are going to be in just getting out break even. So some traders bought here, they bought more lower, and their initial hope was an upside breakout, tested the September low, and the measure move target up here. However, with this kind of a pullback, perhaps those bulls are now thinking, well, gee, we might find sellers up here. Therefore, if we get above this high, instead of buying more, maybe they sell more. There's still an open gap right here. So I'm going to draw this line right here as a reminder that there's a gap. And bulls are going to buy into the gap, defending it. So bears, they sold this high, scaled in higher. Maybe they sold the 1 high, and you can see if they did, they got out break even. But the bears sold this high, scaled in, and when the market came really close to the entry, they bailed out of the trade. So they make a little bit of money on the first entry or the second entry, and they lose a small amount on the first entry. So they do a little bit better than break even. But, you know, for bears, I think this was too aggressive, selling below 32. However, if they did, what do they do above 35? If it closes on its high, they probably have to get out. And the bulls that got out below 32, what do they do if 35 closes on its high? Well, they probably get long again. But with 3 consecutive bear bars, you may have to get a second leg down, so maybe 2 legs and a pullback to the moving average. So the bears are trying hard, and so far they're doing a good job, but again, they need to get bear bars closing on their lows. They need to close the 20 high gap. Otherwise, traders will buy. So now we have 4 consecutive bear bars. The bulls, well, the bears are hoping for an endless pullback here in the test of the 27 high, and they might get it. But, again, they still need a little bit more. So far, they've done a good job of reversing the breakout on 29, 30, and 31. But let's see if this bar will close on its low. This right here is a really important bar for bulls and bears. 4 consecutive bear bars. Can the bears get another close? That would probably make the market always in short. It might have gone always in short on the prior bar, but I think most traders want to see at least one more bar. So trying to close the gap, and they might do it here. They're trying to close a bar below the 20 close, and they're certainly demonstrating strength here. But let's see if the bears can close this bar below 20, or will this bar reverse up late in the bar? We don't know yet. So always in short, sellers above. But let's see how this bar is going to close. Probably a lower high and a second leg down. So it's sell to close and probably going lower. Breakout on 36, close of a 60-minute bar. But let's see what the follow-through would look like. And you can see at the doji, 24 was the open, 36 is the close, so basically a doji on the 60-minute chart right here. So probably at least a second leg down and sell to close. Stop far, and if you're selling down here, probably better if you can scale in higher. Make it down to the 26 low, the 19 low. One thing to point out on the weekly chart, we opened just one tick above the low of last week, and you have to wonder if we're going to have to fall below the low of last week and trigger it, which is down here. So it's possible we have to do that. Is this the start of the rally? We have no idea yet, but it could be. Rally? We have no idea yet, but it could be. So we can see a lot of traders gave up as soon as 35 closed. A lot of traders gave up below the bar. Really dangerous to be holding long though, especially after this bar closes. At some point, most traders, the reality is some bulls will buy and scaling all the way down, but super difficult to manage. And how far of a stop you need. You may need it below the low of last week. So most traders just do not have the ability to do that. Therefore, when you see that you're wrong, just get out, because you don't want to expose yourself to more risk. So arguably, we have a bear breakout below a flag, low probability event, selling off, and this is looking good for the bears. And you have to wonder if we're going to get down to the 14 low. The follow through so far is good, which increases the chances we're going to go lower. But let's see. Will this bar close on its low? Will traders scalp out? We don't know yet. The bulls see a 50% pullback from the low of 14 to the high of 32. So some buyers here. But strong enough breakout, and 5 consecutive bear bars, 6 consecutive bear bars, probably sellers above, and at least a second leg down. Some bears sold the high here and scaled in here, getting out break even back at the 14 high. One of the things that's interesting about that sell whenever you sell below a bear bar like this, and if let's say you sell above it, and the market goes up, and it doesn't fill you on a scale and entry and starts to turn back down, a lot of traders, so you're short here, you couldn't scale in here, and it starts to go down. Usually it's better just to get out of the trade back at break even, because it becomes dangerous, because you can see the market started to go down. So it didn't fill the traders that scaled in. It didn't fill the traders that tried to get out and scalp for a profit and turned up. Therefore, it did trap bears who sold the 14 high if they weren't quick to get out. So probably going to have to get down to the 69, let's just call it 38.70 area, which is 1 or 2 ticks above the 14 high. Trading range days, always forgiving, which means bears that sell, scaling higher, can typically make a profit. Now, we mentioned that this was a wedge, and, you know, as far as how can it be that the market, you know, how in the world can this be a wedge? This is just too strong. Well, trading range day happens all the time. So sell to close, and sellers above probably going higher, or excuse me, probably going lower in at least a second leg down. The bears probably at a minimum want to get to 38.70. Ultimately, they want to get down to the 14 low in the low last week. And I would not be one bit surprised if we did. Maybe we get a measured move from these two bars, which takes you really close to the 14 low. So let's see, what will this bar look like? Will it be a bull bar? Will it be a bear bar? So far, good for the bears. The bears are looking good, but they're getting in support areas. And 6-bar bear micro channel, so may have to pull back first. But, you know, we could easily, you know, too early to buy, we could easily just pull back a little bit and get a second leg down. Ethan, you bring up a good question. And part of that is it just takes you have to practice responding when you're wrong. So I thought we were going to get a second leg, and I thought this breakout was strong enough. This was a pullback, and my thought was we would get a second leg and at least go above here. But then you get a 4th bar, and I still slightly thought we were going to get a second leg up. But then you start to get this bar that gets bigger and bigger and bigger, and at some point you have to ask yourself, is my premise wrong? And then you have to, you know, it's just like out. When you're wrong, you have to kind of be like Forrest Gump. If you're wrong, get out of the trade. And if one was taking high probability betting on a second leg, the bulls did not get their second leg, and the bears got a bear breakout, that means the lower probability event happened, which means there's going to be a second leg down because there's trap traders. Therefore, you get out and you sell. But that's easier said than done. It takes a lot of practice doing that. And the first piece is recognizing you're wrong, and then practice responding to being wrong. And one key with that is trading small enough that you're okay with, you know, getting out of the trade. So doji, disappointing bar for bears, increases the odds we may pull back soon and find buyers. So sell to close, but doji, which means probably going to pull back soon. We're testing the 14 high over here. Trading range day, so you have to assume that bears are going to be disappointed here. So testing the 14 high, you can see came close, bulls bought, bears bought back shorts for a scalp, testing the 26 low here, and bears, the reality is probably start selling up here. 36, 37, strong enough for a second leg down. The question is, do we pull back first? always in short, probably at least second leg down. So we have a wedge, and talk about the weekly chart in a second. 3 pushes up, 1, 2, 3. Leg 1, pull back, leg 2. One target is the 14 low. And you have to wonder, how can we get there? Well, if legs have symmetry, leg 1, we're going to have a pullback and get leg 2. You have to wonder if leg 1 pulls, if we pull back up to here, which is the middle of 36, and then we get our second leg down, it would create symmetry. So the question is, do we pull back first or go straight down? You know, it is sell to close. However, I'm more interested in selling a pullback at this point. The risk is big, and I think the majority of the time you typically see a pullback. But strong enough breakout, first look will probably fail. You also have to wonder if we're going to test the weekly chart. Pull it up here. Good looking bear bar last week. Here's the low of last week. Not so good bar so far this week, selling off. Probably will go one tick below the low of last week. So this means my thought is we may have to get down to the low of last week. And if that's the target, maybe this is leg 1. And we get a pull back up to here, a little bit above the 38 high. So let's see what we get here. Bulls, they want a higher low major trend reversal, but strong enough breakout, probably minor pullback and at least sideways to down. So probably sellers up here somewhere. Low 1 below 42, strong enough bull bar 41, probably a second leg up. The market's deciding, are we going to get a bear breakout? Is this the pullback or do we have to go higher? I think we've got to get to the 36 close and go a little bit higher before we get the second leg down. Strong enough bull bar, probably second leg up. Some traders, this bar is climactic even though it's strong. Some traders got trapped here. They bought the close 36, scaled in, and they have sell orders here. Other traders sold the close at 36, scalped out. They're going to try and sell the close at 36 again. So probably have to get up to here before we go much lower. The bulls want a bull breakout and a test back to the 34 low. Second leg down, testing back into here. You know, again, I don't know if this is deep enough pullback. Trading range day, so you have to be open to the opposite and a rally. But so far, breaking out to the downside, and we may have to get down to the 14 low and the low of last week. Okay, I'm back. So let's see here. Breakout, follow through, 36, 37, strong enough for a second leg down. And we're getting the second leg and we're testing the 14 low. I still think the big question is the weekly chart. I think we've got to get below the low this week, and we very well may do it here. 2 legs down. So we're at the 14 low, probably going to have to fall below it. I'm going to get rid of this measured move target here. And 5 consecutive bear bars, gaps, so good for the bears. A little bit climactic on bar 46, so some traders taking profits, probably sellers above, and we're going to have to get down to here. We may have to get down to the open of the week and the low of the week, but the question is how deep is the pullback first? Give me 1 second. Sorry, I had to adjust a few orders. So probably a second leg down. So we have leg 1, pull back, leg 2, probably will get a third leg down. But the pullback might be deep, and maybe we have to test the 40 low first. So I'm going to answer a couple questions in the chat real quick. So somebody asked, let me get it pulled up. SAKS, since we went above the bar 18 high, is there still a 90% chance that we've seen the low or of this selling? Or does this big selling pressure make it likely we'll go below? So when you get a big sell-off like this, let me do one more thing real quick and I'll answer this. Yeah, so when you get a big sell-off like this, big bear bar, second leg, in general, we broke above bar 18 here, so odds are this is the low. However, when you get, sorry, I've got a dog behind me. When you get a sell-off all the way down to the 14 low, it increases the odds that we're going to fall below it. So, I would kind of begin to ignore somewhat bar 18 rule when you get this close to the low of the day, because it increases the odds we're going to have to fall below it. George A., your question about bar 29, why not take it? Well, part is it's an upside breakout above a double top. If it fails, it becomes a wedge. So double top here, failed breakout, turns into a wedge, or wedge, 1, 2, 3. It's also the third push up in a trading range day with a gap down. So it might be more sellers up here. For the bears, it's sell to close 46, but tail below and 5 consecutive bear bars. Some traders sell to close at 46. They sell more higher, trying to get out back at the 46 close. Other traders will hold, betting that we have to fall below the 14 low. But I think we're going to have to close this gap a little bit. I'm going to draw a line here just to kind of serve as a mental reminder that there is a gap here. And I think we'll have to get closer to it. So I'll just make it magenta. So the market is testing the low close. Traders deciding what's going to happen here. Okay, bears getting out, break even at the low close. Probably we'll have to get down to the 14 low. Let's take a look at the 15-minute chart. 2 legs down, testing the bottom here. Actually, this is easier to see on the 60-minute. So on the 60-minute chart, we've been selling off, going sideways, broke above the trend line, and testing the lows down here. So we're at the bottom of the trading range. And although I think we're going to get down to the low of last week and the 14 low, I'm beginning to become trapped out here. I want to sell, but I really don't want to sell a possible third push down or the bottom of a trading range. And because of that, I'm probably going to have to wait, and I'll probably miss the downside breakout if we get it. But, the single biggest thing you can realize is you're not going to catch everything, and that's okay. The most important thing is to avoid the really dumb trades, Al calls them stupid trades, that ruin the math. So it's so easy to take a bunch of high probability trades, do well, and then, you buy this low. Give me 1 second. I love it. You buy this low, you buy the 32 low, the 33 close, the 34 close, and you see this bar, and you buy more, and you buy more. And before you know it, you're all the way down here, and you just take an incredibly big loss. It's just not worth it. So getting out when you know you're in a bad trade is super important. So probably going to vacuum down to the low of last week, probably buyers down here. Obvious targets below, open of the week, low of last week. May have to go lower. Oh, sorry. Yeah, EFO19. I did miss your question. So you're saying, let me just read it real quick. At this point, by the way, I think we're going to go down to here, but again, breakout below a trading range. You can take it, betting that we get a measured move down. Maybe we crash, but just ask yourself, are we really going to get, and I'll come back to your question, are we really going to get this? Probably not. So I'm betting that the day is going to end up being a trading range and that this is going to fail. That doesn't mean I'm buying right now. And I might miss a big move, but I'm interested in a pullback. So back to your question, EF019. At this point, what are the chances that we have, and this was earlier on in the day, but at this point, what are the odds, the chances that we have a measured move down equal to the height of a trading range? Yeah, EF019, if you can clarify the trading range, I don't know if you mean the high of 32 to the low of 26 or the low of 19, or if you mean the overall range, but this, the 19 low here, this is a double bottom, so one can argue we got a measured move down, we're there. The next target is a measured move of the entire range, which is far below. I don't think we'll get that, but so far, strong enough breakout follow through, at least a second leg down. And yeah, the entire range, I don't think we'll get it. But the reason is that's a low probability trade. Low probability trades are pain trades because they trap traders. And when they occur, let's just say 40% of the time, it traps all the high probability traders. So if I'm a high probability trader, which I generally like to take high probability trades, one of the things I might do is, and I'm not doing this right now, I'm just giving an example, is buy, maybe I bought the low of bar 14 scaled and lower. Well, what do I do if this bar 49 closes on the flow? I'm trapped. And if I don't get out, and maybe I bought here, I bought more here, and then this bar closes on the flow and the next bar closes on the flow. Well, now I'm underwater and I've got to sell off for a loss, and that could drive the market down. It's a great example of, let me pull up this day on the 13th. The 13th is a great example of your question because we got a measured move. Must not have deleted all this. We got a measured move down from here to here, and you can see late in the day we got it, but it looked like this. So probably bulls will probably make money buying the 14 low. So let's see what this bar looks like, bar 49. So we have bulls buying that bought the 14 low, scaled in lower, trying to get out, break even back at the 14 low, and they probably will be able to get out, break even. So they bought here, they scaled in lower, they're probably going to be able to avoid a loss. The bulls ultimately hope this is a wedge, 3 pushes down, 40, 46, and 49. They want 49 to close on its high up here, but probably won't get it. But we'll see. Probably strong enough breakout for a second leg down. Yeah. Give me 1 second. Consecutive bear bars, probably going at least a little bit lower. Probably exhaustion, 3 pushes down, but strong enough breakout, probably second leg, first up may fail. If I bought the 14 low and scaled in lower, I might be more interested in getting out break even. Yeah, MR, that could be, he's asking, could a measured move be from this double bottom, the 16 low, 40, it failed? Sure. Any one of these tails is the double bottom. So double bottom here and here, double bottom here and here, double bottom with 26. It's all a double bottom. So you are certainly correct with your logic there. And the question now is, how disappointed can the bears make the bulls? Can the bears trap the bulls that bought in here, 48 and 49, and get a second leg down? As strong as 48 and 49 look, you know, the problem with that is, the problem with 48 and 49 is it's late. Here, here, and here. So it's the third push down. It increases the chances of exhaustion. However, I'm interested in buying down here, but I'm not interested in, and to give you, just to explain something, I actually bought during this bar and scaled in. I took a small loss, maybe a 0.6 ticks just now. And the reason was, I think we're going to the 14 low. However, I figured we would bounce after 39, but I did not want to, I'm not willing to hold up here. I think we're going to get a second leg down. So there's probably sellers above for at least a small second leg down. But overall, I'm expecting a trading range. So the daily chart, you can see we've tested this gap, sold off, testing back into the gap again. So far, breaking below this low down here. And, you know, again, back to EF019's question about a measured move of the entire range, it looks really far away and it doesn't look like we'll get there. But the same thing could be said for the August 13th. We could easily get a measured move down to this low. Probably won't, but it could certainly happen. So I wouldn't rule it out. I think the most important, yeah, well, and EF019 said he remembers that day. Well, they remember that day, and it was painful. And that is a, you know, August the 13th was a really great example of a pain trade. Because when you look at it, you just think there's no way this day is going to be a trading range. Trend from the open, 60% chance, trading range. And you're thinking right here, trading range, trading range, trading range. We test this gap, we break to the downside here, and then we get a breakout bar, and then we get a follow through. And all of a sudden, 1335 central, before you know it, we have doubled the entire range. So this is why it's dangerous. You know, when you know you're wrong, you just get out. So at this point, that's why I got out of this trade for a small loss. Even though I think we may rally, I don't like this. So I think we're going to get a second leg down. But probably exhaustion. Testing the 14 low. So bulls bought, scaled in lower, which was expected. But again, you know, as big as, you know, it was probably a mistake, I don't know, to get out here for a small loss. I bought like somewhere, I bought during this bar, I think where the 48 is. I think I bought like right there, bought more on the close and got out somewhere like right here. I don't know if that, I mean, in hindsight, that was a mistake because we're at target, but with these, I was not expecting, my hope was I would buy and this bar would not close on its low. But I don't know. I still think we may get a second leg down, but consecutive sell climaxes, probably sideways stuff for a little bit. Certainly disappointing for the bears. And this, again, we're testing the low of last week and the open of the week, so there are going to be buyers down here. And that was probably the mistake. I really should have probably waited. 60-minute chart, reversing up. So maybe we get a bull bar closing on its high for the 60 minutes. So target for the bulls, 14 low, and the 46 low, as well as the 48 high. The bulls are hoping this is exhaustion. So we shall see, but probably going at least a little bit higher. So testing the breakout point, pulling back, strong enough. So if you sold the 49 close, what do you do here? Sell 49, you're disappointed 50, and 51, big bull bar. So take a look here. Sell the close of right here, and this close is 52.5, disappointed right here, and look at this low, 52.75. So the bears they got trapped. They sold this close, disappointed, trapped here, and we got an upside breakout. Some of these bears will try and get out, break even. Some bears sold the high, scaled them higher, getting out, break even here. So probably buyers somewhere down here, and probably buyers if we get back to the 49 close. Still may get a second leg down and get one tick below the 49 low. And let's see what they do here. Well, so the bears, they want 52 to close on its low. However, even if it does, probably buyers somewhere below. We're at support, low of last week. Today's probably going to be a trading range day. And we're probably going to have to pull back soon. We're far from the moving average as well. Moving average all the way over here. So probably have to get closer to it. Good bar for the bears. The bears want this measuring gap below. So they want the measuring gap all the way down here. Probably won't get it. It's far away. So you know, because it's far away, that is a low probability trade. The bulls, they want a bull bar closing on its high here. That would be a double bottom and a second failed breakout of the low of last week, open of the week, and it would increase the odds that we have to get back to the 14 low. So let's see what the bulls can do here, or what the bears can do. Can the bears get this bar to close on its low, or will the bar reverse up and disappoint bears selling down here? So far, good for the bears, but consecutive sell climaxes increases the odds that there's probably buyers at the low of last week and scaling in lower. So probably not the most ideal place to sell down here. This is probably profit taking, and more so weak bears selling. So I still think we've got to get closer to the moving average. And, you know, again, when you have a day that has as much trading range price action as today has had, all of this, it severely lowers the probability that the day is going to become a trend day. It's the same thing, you know, it's similar to what I said up here. My concern was I wanted the day to get a measured move from the low to the open and projecting up and getting to the September 6th low. I wanted that, but my concern that I stated was this might be too much selling pressure and it increased the odds of sellers. So just like up here, the bulls tried to break out and failed, the bears are trying to break out down here and they're failing, which increases the odds that the market may fail somewhere over here. Now we have a trading range, all these lows over here, and the bears are trying really hard to successfully break below it. And they might be successful, but I need to see more. And I mean, the reality is this is pretty climactic, so it's really hard for me it's going to be hard for me to convince myself to sell down here. So the traders that are, can traders buy down here? Some will, taking a chance that we fail to break below all these lows over here. Daily chart, well, it's easier if I show it. I'll just show it like I was. Some bulls buying, betting that we fail to break below all these lows, but the bulls buying there, they have a very wide stop. One of the challenges with buying at the bottom of the trading range as it's going down is the stop is not that clear. Do you put your stop 10 points below here, 20 points? And more often than not, if your stop's too close, you'll find yourself getting stopped out to the tick. So, I would use even this is probably might be too small. So a lot of traders They use the wide stop, maybe just catastrophic, somewhere down here even. And when they see this bar breaking the downside, they wait and see how strong the bar looks. If it's going to, if the bar closes far on its low, they get out. But the other problem the bears have is these two bull bars, that's damaging. And arguably the bulls made money buying the 14 low. So they got 48, 49, but then 50 and 51 damages the bear case. So that increases the odds that there might be buyers somewhere down here. But the bulls really need to reverse the market up here. So tail closed, maybe at the midpoint, maybe above it. So probably going to pull back here, but again, fairly disappointing for both the bulls and the bears. But probably not much lower before we have to pull back. Traders are selling down here, but I don't know. I think it's pretty challenging to sell this far away from the moving average. The bears are doing a good job breaking below all these support levels, basically this blue line, which is the low last week. But, part of the problem I have with the bears is, this is a lot. The bears did a lot over the past 2 hours, maybe hour and a half. And I think they may run out of steam here, which is why I'd rather look to sell a pullback or wait for a couple legs up. But who knows? This is exactly how, things like August 13th happen. But probably not going to happen today. So, what do you do if this bar closes on flow? Well, it would technically be sell the close, but, again, I just think that's a really challenging, I think it's really challenging to sell all the way down here. Again, I do think the bulls that bought the low last week and more lower are probably going to make money here. But they have a very wide stop. So I'm not recommending traders do that. I'm just saying that's why I think there's more buyers down here. But, for one, I try and keep things simple. If we're really far from the moving average, especially after this, and this, and this, it's really hard for me to convince myself to want to sell. And part of the reason for that is, just ask yourself, if you sold anywhere up here and you're still short down here, you're thrilled about the trade. Therefore, are you really going to be eager to sell more down here? No. This is probably more than you expected, which makes me think the market's going to have to pull back and go sideways up. 15-minute chart. We're in a channel. I had these drawn, I forgot to mention it. So over here, I thought that the market may have to, this was exhaustion, and the market would have to get up to here or here. And you can see it tried there, and then went above both and sold off. When you have exhaustion bars, typically all the market has to do is to go above it and then sideways. That does not mean it reverses. And good bear breakout, 2 consecutive bear bars, pause, and a big bear bar. This is exhaustion, so don't be surprised if we get back above 58.75. 58.75 on a 5-minute chart is right here. So now look, what happened to all those, I thought the bulls were, what about all the bulls that were supposedly trapped down here? Well, the bulls buying in here have very wide stops, and they bought more lower. They're deciding now, do they just get out, break even on the entire trade, or do they hold? For the bears, I'd be out of shorts at this point. If you're not, what do? You probably get out above 54 realistically. And, this is probably just too much reversal. And you don't want to see the market reverse up to here. It seems like 14 is really far away, but if this is a trading range, we could easily just vacuum back to the 14 low. It would not take much at all to do that. So, if bears step aside, and that's a lot of reasons why you get sell vacuums in trading ranges. You know, we had a couple last week where here's a good one. So surprise breakout, follow through going lower, and then we just melt away. And here's the breakout point, pull back, 1 bar, we just get back to it. So I would not at all be surprised if we get back to the 14 low. In fact, I think we will get back to the 14 low. So that's why I'm just not interested in selling down here. This is where traders take profits and aggressive bulls are buying. So I believe the FOMC is tomorrow, since today's Tuesday. That is a reminder, though. I'm going to write that in the Discord. FOMC is tomorrow at 11 a.m. Pacific time. So everybody mark that on your calendar. I'll try and talk about the FOMC going in for tomorrow. But yeah, ES Globex charts a 15-minute, 3 consecutive sell climaxes, 1, 2, 3, and you can see we're already halfway up to this bar, and I said this is the first target, this 58.75. So, you know, again, what do you do if you're a bear here? Well, if all the bears start giving up, this could race up really, really quick. You know, it happens in levels. So even though there's 4-bar micro channel, 3 consecutive bear bars, probably sellers above, you know, I wouldn't sell down here. There's no way I'm selling after consecutive sell climax here, 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 and here. This was probably exhaustion, but 60% chance you may get a second leg down. So this could be the second leg, which means we could get up to here. We could even get back up to here. So sell the closed bears 54, you know, sure, but there's no way I would sell the close at 54. But if I did and I sold this close, you know, traders, well, I don't want to confuse traders. Sell the close 54. Some traders sold the close disappointed 55. They may look to get out break even. But, you know, again, it becomes more, every leg down in a move increases the odds of reversal. So if you're short and you're holding short, scaling in higher, that is a very dangerous thing to do here. And again, this red line, I think is very important. 14 low, 51 high, we could get up there in 1 bar. So I think it's better just to be flat here, you know, and certainly be out of shorts. Some bulls, they'll buy, betting we get up to here. Other bulls try and buy 50% pullback here. You know, again, it's really important to be patient. And even if you missed the 30s to 6, 37 sell, and, you know, I'll give you an example. I sold during here, scalped out, and basically got out here. So I missed, and what was the next thing I did? I actually I sold the close of this bar. Okay, so I sold, I got back out here. I sold this close, or excuse me, I sold the high of this bar, got out maybe a point or two above the close of 46. I figured the bears would be disappointed on 46. I was confident they could avoid a loss, so I was willing to sell and get out somewhere down here, but I missed all of this. So, and then I actually ended up buying here and mismanaging it and taking a small loss right here. And I didn't hold there. So I've actually missed the majority of this move. I don't really care for this, you know. In fact, I really don't. I'm not the world. I mean, I really don't actually like these big moves like that because it's a low probability event. I like this kind of stuff. I like where it channels down, reverses up, and you get second legs. It's all orderly. But when you get this, it becomes just really extreme behavior. And it's just, I don't like to sell it. So the point with me bringing that up is you have to learn to be comfortable with what's going on. And you're going to miss stuff all the time. And that is perfectly okay. The key is not doing dumb things. Don't impulsively sell down here because you missed this whole move. That's what I'm trying to make. That's the point. So probably going to have to be close to the moving average. Test up to here. You know, daily chart, 2 hours left in the day. You know, again, I think we're going to try and close above the lows down here. So in other words, the bulls want to close above this blue line. And you can see traders bought the blue line, scaled in lower, getting out a couple ticks below or a couple points below the blue line. So there you go. So that bounce that happened just now when we sold off, that is bears. That's aggressive bears selling the touch of the low last week. That's also bulls that bought the low, scaled and lower, getting out. That's why we pulled back. Let me do it on a 1 minute chart. But I don't want to do it on this bar counter. My mouse is frozen just 1 second. So consecutive bull bars is probably going higher. So you can see it was this small bounce here, traders. You've reached the target, the blue line low last week, and bounce for a scalp. So consecutive bull bars, you know, again, most traders should be out here. You know, you buy above, stop down here if you're betting on second leg up. Probably have to get to the 14 low and the moving average here. Okay, had to step away for a second. So, 1 second. Okay, had to step away for a second. So, 1 second. So 58 outside up. Looks like we're going to test the 14 low here. Give me 1 second. So testing the 14 low, probably going at least a little bit higher. There's one a second entry short with 58, but after 58, probably a little bit higher. So let's see what this current bar looks like. So the bears are giving up further. You know, what are the next targets? I don't know. I think it's limited. The bears would want to get to the bulls want to get to the open of the day, but probably not going to get much higher. But so far, always in long, probably going at least a little bit higher. Next target is probably the 48 high, which is a reasonable spot for the bulls. So why did I say 48 high? Let's talk about that. Well, it was reasonable exhaustion. So over here, consecutive bear bars, 3 pushes down, probably exhaustion, going to get to here. But 60% chance maybe you get a second leg down. Well, there's the second leg. And we reached this one, broke above it. So you have to wonder if the next target is going to be here. Some traders will sell the moving average, but again, I'm not interested in selling here. You know, the bears were able to sell all the way down, and they're probably exhausted, which means this is probably one leg, pull back, second leg. So I do think, you know, at this moment, I think we're going higher and it's always in long, but the pullback could be rather deep. But this is why I was hesitant to say we could get a measured move down, after we broke below 14. I figured there was probably buyers below because most of the time there's buyers below. It's pretty rare when you have a day that has a range that's pretty big like this and you get a lot of buying pressure here. It's pretty rare to break far below it and go for a measure move down. Reasonable close for the bulls, tail above, so probably sellers above soon. Still probably going to get a second push up after 58.59, so probably buyers on a pullback. Bears trying to get a second entry short, but after 58.59, probably more buyers below. So you can see some bears, what do? They sold the moving average, tried to scalp out. Bulls, they bought the pullback, so as that the current bar started to sell off, bulls bought, betting we would go higher. One of the single most important things, though, I'm just trying to think of little things to say too, is it's really important to trade small, because a lot of times if you the smaller you trade, and ultimately I think that's why, again, I think the SPY is just a wonderful thing to trade, because you can dial down as really as small as you want. But it gives you so much flexibility. And a lot of times people are pressured into, they do something reasonable. They buy somewhere in here, but they can't take the risk. They thought they could, but they never dreamed it would go this low. They said, so, they weren't emotionally ready for it. They thought they were. And they exit at the very bottom, and then this happens. It's just, I know it's emotionally crushing, but trading really small is one of the keys to becoming consistent, because it allows you to think and make decisions. So still probably going to the 48 high, may go higher than that, but it's certainly a reasonable target for the bulls. And the bulls want to get to the open of the day, but they probably won't. So you can argue we're setting up a 20 gap bar short, but again, consecutive sell climaxes in a trading range day, that makes me think this pullback is going to be deeper and stronger than what the bears want. Trading ranges are always disappointing traders. So the bulls, 2 legs up and the market melts away. The bears, they finally break below the low of the day, but what happens? Well, they're too exhausted, so we get a second leg and then the market reverses. So probably gonna, maybe we pull back here, 20 gap bar short tail, but 4 big bull bars closing on their highs, 1 bear bar closing below its low since 54, probably buyers below and going a little bit higher. So will the bulls swing? Will the bears swing or scalp here? Some bears sold to 60 close, sold below 60. They sold the moving average. Probably the bears will take profits here and the market will get a higher low. But the bears do, ultimately, the bears are hopeful that we get a second leg down and we test the 54 close. And it's possible. But we'll have to see how 61 closes. So far, good bar for the bears. Testing under a 50% pullback, so some bulls will buy around this area, 50% of the rally here. So let's see. There's about 40 seconds left in the bar. How is this bear bar going to close on 61? Will it close on its low? Will it have a tail? Will it close at the midpoint? Let's see what the bears can do here. Trading range, so the bears might get disappointed here. And in fact, I think they will. Good close for the bears. Strong enough surprise, 61. Probably at least a small second leg down, 63 or 64. So let's see what happens here. more traders buying the close of 61 than selling. Bears will try and sell a pullback of 60 and 61. And the bulls, maybe they buy the 61 close and scalp out, which looks like a lot did. But so far, bears need to get all through after 61. So you have to be thinking about the end of the day and what both sides want. The bears, obviously they want the day to close on its low, and they want a close, around the 54 low and lower. But overall, the biggest issue is the low of last week. And ultimately, I think that's going to be a magnet. If you just look, we zoom out and we look at all the bars to the left, this is obviously an important price level. And you have to wonder, obviously, we tried to break below it here on 54. We pulled back. We're trying to break below it again. And there's probably going to be buyers down here, more buyers down here than sellers. So the bulls, they want a higher low major trend reversal, rally, pull back, second leg up. And probably a second leg here. Consecutive sell climax is 1, 2, 3, and 4. This is probably not enough to cool the bears off. They probably need more. The bears want a double top. They want a double top of 51 and 59, or 47 and 59. They want to measure and move down. But again, you have to ask yourself, the bar just closed. If 62 is such a strong bar for the bears, if 61 is such a strong bar for the bears, then why is 62 a bull bar? Now, 62 is not an ideal bull bar to buy above, but 61, the bears that sold 61 might be disappointed on 62 and buy back shorts here. And if they buy back shorts, we could go above the 62 high. So let's see what happens here. Traders, you can see traders buying back, some traders buying back shorts. They sold the 61 low, which is 51.75. Disappointed 62, trying to get out at 51.75. So they're trying to get out, break even. Bears getting a second leg down after 61. So for the bulls, they see a double bottom and 2 legs down, 61, 62, double bottom with 58 or 53. What do the bears do here? Well, if you sold the 63, 64 close and more higher, what happened here? Do you notice something about 63 and the 64 close? A lot of bears tried to buy back shorts, and in fact, they were so happy to get out that you can see they got out a couple points above the 64 close. So always in bears, probably exit here, probably above 63, even though it's a doji. Double bottom after consecutive sell climaxes increases the risk that we go higher. Targets above, and you can see the bears giving up. Targets above, 59 close and the 48 high. So probably going to get 2 legs up here. And the bulls, let's see something. Bulls, they have a double bottom. They want to break above the neckline and measure move up. Probably won't get it, but you have to be open to anything, and it could certainly happen. But so far, looking good for the bulls. Bears clearly giving up here. Probably going to get to the 48 high. Some bears selling at 59, bulls taking profits here, but again, I think we have to get to the 48 high, so I'm not interested in selling. Also, the bears wedge 1, 2, 3. So double top, but again, I think we might break above this and go higher. So not ideal. What are the chances we get to the open of the day? Well, let's see how this bar closes. Well, it closes a big bar, closing on its high. So you can see right here, this is disappointing for the bulls. Bulls are selling. You know, we break above the 48 high and pull back. That's a sign of weakness for the bulls. Let's see if the bears make money selling the 59 high. But depending on how this bar closes, we could get up to here or the open of the day. You know, again, I've been saying that my issue is we're trying to break below all these lows down here, and on the daily chart, we're at support. The July 18th low, we've got this gap here. So I think over the next couple of days and weeks, we're going to go up to here. And by a couple of days, I really mean a couple of weeks. So we triggered the low. We fell below the low last week, and we found buyers. Strong enough bull bar 63, probably a small second leg, but so far, you know, a really big tail, fairly disappointing if you're a bull. You know, ask yourself, you don't want bears to make money selling the 59 high and scaling in. So that's a sign of weakness and reminder that we're probably still in the trading range. But 64 is a great reminder that when you give a gift, when one side gives up, you can get a really violent bar. So that's why when you get a double bottom after consecutive sell climaxes, here, 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 and here, you get a trend line break and a retest. You got to get out here. You know, don't risk all of this. And you know, if you're still long, well, I don't want to tell people how to manage trades, but either way, always in short, probably going higher. Yeah, double bottom 63, maybe 58 or 54. Double bottom for the simple fact that it's a retest of the 54 close. Trader sold the 54 close, disappointed, scaled in higher, trying to get out back at the 54 close. And when you get consecutive sell climaxes, there's greater risk of a sharp reversal. So the bears, they want a wedge, 3 pushes, 1, 2, 3. Strong enough bull bar, probably buyers below, end up going at least a little bit higher. Tail 64, you have to ask yourself, is the tail on 64 a warning that maybe the bulls are not as strong as we think they are? But trading range, surprise 64, tail on 64 is what I meant. Trading range, surprise 64, probably going higher and at least a second leg up. Might get a measured move up to this target up here, but this tail makes me suspicious. It is a warning that we're still in a trading range. Bears trying to keep bulls keeping this measuring gap open here, but enough of a surprise, probably second leg, but the stop goes down here. Wedge, but probably buyers below. 64 strong enough, probably at least a second leg up. But 65 is a reminder that we're still in the trading range, and the bulls may be disappointed here fairly soon. The bears trying hard to close this gap, and the gap is still open. It's a negative gap, so still making a measured move, maybe based upon the gap, 63 low, and this gap right here. So maybe something like that, which would take the market to the high of 42. High one buy above 65, but probably sellers above. I still think we're going at least above this bar. It's a breakout pullback buy. So in like a 2-minute chart, 1 second. So on a 2-minute chart, kind of looks like this: leg one, pullback, leg two. So probably going there at a minimum. I'm keeping this line. Well, I'll get rid of this. I have this line right here just kind of as a reminder. This is the exhaustion point. Now we might get a measure move up. I mean, I would not be surprised at all if we got back to the open of the day or the 42 high. But it's probably going to do it without me. You know, I don't like to see buy climax, bad follow through, buy climax, bad follow through, buy climax. It's just pretty disappointing. So, but we have a measuring gap here, and that could lead to an upside breakout. Okay, so we're getting overlap here. So again, always in long, probably going to get a couple legs up, exhaustion, but you have to ask yourself, one of the things you can do in a trading range is, of course, market's probably going to break out as I'm talking about this. You know, you have to look at prior areas where there were sideways, and you'll typically get more sideways price action there. So a lot of overlap. This is not what you want to see if this is going to be a strong breakout. You know, again, this line, I have this here for a reason. It's a reasonable point of exhaustion. I still think we're going to get to the 42 high. We're testing the breakout point, 40 low. And so the bull's bought, scaled in lower, making money here. Almost to this measuring gap. It's a measure move from this low to here. We're getting close to it. You know, would not take much for us to get to the open of the day. Breaking out to the outside, but this measuring gap, it's a negative gap. It stayed open and targets above. Trading range though, so this might be the top of the range. We went sideways in this area, so I could technically draw, maybe this is the start of a trading range. But the point is, it's, you know, bears are somewhat making money selling above bars, which if I'm a bull, that makes me nervous about holding long here. But I don't want to necessarily sell with that measuring gap, the 59 close and 65 close. So you can see it actually. Let me pull up the line chart because it's easier to see it that way. Let me do it like this. So here's the ES.D. And by the way, just so you can kind of overall see it, we formed a channel, broke below the channel, broke the trend line, and we're trying to form a higher low major trend reversal. So the bulls ultimately what they want is, you know, something like this, breakout and test of top of the channel. But back to what I was talking about. So here's a 5-minute chart, and let me pull up a line chart. What do you notice right here? An open gap. So although the gap closed and the gap has tails, if I go back to this chart, there's tails. It's still open because they could not get a close below the high close. And a line chart, it marks the closes of bars, not the tails. So important to realize that because institutions trade line charts. Okay, so this is why I was not super thrilled about wanting to sell. You know, what happened to the bulls here? Well, too much overlap. And 64, I said on 64, there was a tail. And I said, that is the first sign of a trading range. And 4 bars later, 3 bars later, we're still going sideways. And the reason I'm saying that is it's the same thing as bar 1. A lot of times, bar 1, you'll get a lot of bar 1 and 2 overlap trading range. So you can often look at the first couple of bars of the day, and it'll give you a lot of information about what the day is going to look like. Sideways, a lot of overlap. And most days are sideways. So sideways, second by climax is more sideways. Really important to pay attention to bar 1 and bar 2. So what's happening here? Well, some bears sold the 65 low, scaled in higher, those bears are deciding if they get out break even on the entire trade, or do they get out back at 65 low, which is right here. So again, I still have this line drawn, and we're holding at that point. Well, it's exhaustion. Sell climax, 60% chance you get a second sell climax and you go sideways. By the way, I'm going to start the end of day review at 2:45 Central Time. I've got to, I've got something I've got to do at 3:30 Central Time, and I don't want to run out of time for you guys. So I'm going to start talking in basically 38 minutes about the day, just so you guys know. So bears, again, trading range. Bears sell, scaling higher, 2 legs up, and we're closing this gap. So this was my issue. Whenever you get this, strong breakout but disappointment, great bull bar, very strong breakout, but why? My question was, why could the bulls on 64, such a strong bar, they had a great opportunity and they couldn't capitalize on it? Big tail. Well, big tail leads to bad follow through. Bad follow through leads to sellers at a new second leg, which leads to here. So it's all kind of a cascading effect. And it's really important to be able to pay attention and understand bad follow through and what that leads to. So probably more sideways here. I would not, it's 2 o'clock and probably going to form a trading range here. I just would not be in too much of a rush to want to do anything. You might be in the middle of the range or the upper portion of the range. So I just would not be too quick to do anything. Often when you go sideways, it's in between 2 targets. So one target is the open of the day. Another target's the low of the day. So the bulls know the day's not going to be a strong bull trend day because it would have to close up here. So what do they want? Well, they want to close above the open, which is here. Look where the current price is. So if I take a measured move, an equal distant move from the current price to the open projecting down, takes me to the low of the day. So that tells me we're somewhat neutral. The market is deciding, are we going to sell off and test the 54 low once again, or are we going to rally and test the open? The other target to think about is the midpoint of the day, which is right here. So we tested the midpoint here, tested the midpoint here. The bears want to close below the midpoint so they can own the bar. The bulls want to close above the midpoint, which would damage the bear case. Some traders will say that if the bar, if a bull bar does not close above the midpoint, it's not a bull bar, and if a bear bar closes above the midpoint, it's not a bear bar. It's a reversal bar. So most traders are probably better off getting out below 67 or a couple points below 67 and waiting. And the reason for that is risk. If you're long here, where's your stop? It's a second entry short, what could be a trading range. And the issue is stop placement. We probably will go higher, but do you put your stop below here? Do you put your stop below here? You always have to measure risk reward with stop placement. So 69, second entry buy with 65 and 69. Bulls getting their second leg, testing this target here and the high of 42, top of the channel. Next target is the open of the day. Probably will get there. However, again, let's see how this bar closes, but we're probably going to get to we're at the 42 high, top of the channel. Another 3 pushes up. Let me clean up this chart. So we tested into the gap. 3 pushes, 1, 2, 3. Here. So let's see if this bar closes on its high, we'll close on its low. 4-bar micro channel, probably a second leg up. Bull's trying to get a bull breakout of a bull flag. You can call it a double bottom. Here's the neckline, the 67 high. Ultimately, I think this is about the test of the open of the day. And another thing to point out is just look at the stop entry sales today, and notice that the last time the bears made money was on a stop entry short was probably the, maybe the 61 low. So the bears, they didn't make money here. So it's been several bars, which increases the chances of higher prices. The problem I have here, if we get 3 consecutive bull bars, probably going higher. Oh, there you go. So tail on the 4th bar. 3 consecutive bull bars, but tail on top of the prior bar. The issue I have is risk reward. It is a buy, probably going to get a second leg up, but it's a little challenging. And I think a lot of traders would rather see a pullback here. But arguably by the close, first down should fail, and probably will get to the open of the day. Okay, so bulls. This was my issue with buying the close to 71. 3 pushes, 1, 2, 3. Even though it's 3 consecutive bull bars, a lot of traders scalped out, and it can be pretty challenging because you buy the close of, well, there's a few things here, but you buy the close of 73, and you're fairly close to the 42 high. So you can see the close 73 even. Price went to 77, so it went up exactly 5 points and reversed. And what do you do here? We're testing a 68 high, the top of the high 2, which is a bear bar, letting those bears out. Test it, I think, to the tick. But overall, again, even though we're rallying, we're in a rally trading range. So I would not forget the fact that we've been sideways for this many bars. Traders buying, they bought the 72 low and more lower. Probably going to get to the open of the day. Wedge, not great shape. I'm going to go ahead and just remove it. But 3 pushes up, and we're so close to the open of the day, we'll probably have to get there. Getting vacuumed up to the open of the day. Can we get to the high today? Sure. It would make the daily chart have a decent bull bar. So if we close up here, all of a sudden you've got a bull bar closing on its high. But getting fairly late in the day, so I think it's going to be hard for the bulls to get there. Getting drawn up to the high of the day and the 60-minute moving average. So the bulls obviously want to close above the open. They want to close at the high of the day. So let's see what they can do here. So impressive end of the day for the bulls. Obviously, one of my concerns is it's a buy the close rally late in a move that's been going on since 54. Typically, when you get a buy the close rally, maybe arguably probably 71, it usually will not last until the end of the day. So even if, I'll be pretty surprised if let me restate that. The low probability thing would be an upside breakout and close up here. More likely, we're going to pull back here and close somewhat disappointing for the bulls. But this is disappointing for the bears. And again, it's also 2 legs down. So gap down, sold off, 2-legged pullback, second leg down. So maybe maybe not that, but something like that. Anyways, 2 legs down, leg 1, pull back, leg 2. So this sell-off was due to the weekly chart. Let me just talk about the daily chart for a minute. And I'm also opening up the question box. Okay, so on the daily chart, we have a wedge bottom, August 24th, September the 6th, and a second, third leg down here. We're testing into this gap, this green box, and I do think we're going to close this gap. We found buyers down here, and ultimately, I think we're going to the 4,000 big round number, which is right here. So probably 2 legs up, half, and the 2 legs will probably be at a minimum half the distance of the amount of bars in this wedge. But ultimately trying to form a bottom, probably going to bounce and pull back. A lot of buying pressure in this rally here up to the September 12th high. Bulls bought, they scaled in lower. Probably the reality is they'll make money, most likely. So if they bought more lower. They may get out somewhere around here, break even, which would drive the market up here. And it's also a leg in, it's trading range. The bears, they've been selling off since mid-August, so about a month, a little over a month, and they're probably going to be disappointed here, which is another reason why I think the market's going to bounce. Weekly chart, big outside down bar. Odds were we were going to at least go 1 tick below it. On the open of this week, you can see over here, we gapped and we actually went, this is actually the wrong line. So let me fix that. The open of the week's actually this bar, or the low of the week. And you can see the low here was 53 even. The low of this bar was 53.25. So we came within 1 tick and reversed up. And the odds were we were going to have to test the low of the week and go below it at some point soon. And we did over here. So let me just get this adjusted real quick. But probably buyers somewhere down here. Bulls want a second entry buy. There will be bulls who bought above, and again, this is the weekly chart. There will be bulls who bought above this bar, arguably, even though it's 3 consecutive bear bars and odds favored a second leg down. Some bulls buy above it. They buy more lower, and the reality is the market's probably going to have to get back to this high. It will, and 4,000 is also the midpoint. And usually, even if you buy something that seems crazy, the high of this bar and more below the bar, it'll usually come to the midpoint of the 2 prices and allow those traders out to break even. Give me just 1 second here. I want to bring something up. Before I forget, I will talk about the day in just a second. I want to talk about the FOMC. That'll be tomorrow. So I'm pulling up 1 or 2 slides. I would save it, but I don't want to. I would save it for the end, but I don't want to forget, and it's important. So let's let this load real quick. So this is always a possibility. Strong bull bar on the first FOMC. And before I get into that, it is always best on the FOMC report, wait for the close of the first bar and wait for the close of the second. You can often get a big bull bar like this, even if it closes down here and it retraces all the way down to here, or you get this bull bar reversal down. So even with this one over here, big breakout, deep pullback, second leg, this is not the most common FOMC. The more common is something like this. Big trading range, sideways, breakout, and then more trading range. Breakout, sideways, more trading range. And you can also get breakouts that fail. Full breakout, second leg, fails. Full breakout, reversal down. So the point is, this bar is huge. And it doesn't look big at the end of the day, but big bull bar, sell off. So the point is, wait for the first bar to close and wait for the second. Okay, so here, this is what I was talking about. Not enough energy. The move is too extended. Therefore, we probably won't get up to here, and the market's going to pull back. So probably going to close somewhat disappointing. So on the open, we gap down. There we go. We gap down. Bar 1 was the trading range bar. So you have to think about this as a breakout. Breakout, here's the reversal attempt. Probably going to get a second leg down. However, probably buyers below bar 1 and below 60, but the buyers may not come in below bar 32. Maybe the bar 1 closes here or even low today. Bar 2, bear bar, but closing the signal bar was a doji. Bar 1, probably buyers below, but 2 might be strong enough where you get a second leg down. 3, 2 consecutive bear bars. 2 consecutive bear bars, however, bar 3 closing above its midpoint, probably going to pull back here and allow the bar 1 bulls that bought the 1 low and more lower out break even. Bar 3, it will be a bad signal bar for the bulls, so probably not going to go much above this bar. And bar 4, low 1 short, so bears sold, the high bar 3, bar 4, low 1 short, breakout pullback short, probably buyers below, but again, buyers may not come in till all the way down here. And doji bar on bar 5 closed at the 4 low, so a sign of more trading range price action. Bar 6, second entry buy above bar 5, however, poor signal bar on bar 5. It's a bad signal bar, so probably more sideways. But the bulls are not doing enough here. We closed the gap, at least we touched it. Probably we'll have to get to the open of the day, which is right there. And another push down, 3 pushes down, 3, 5, and 7. However, you have to ask yourself, where are the strong bull bars closing on their high? At this moment, we haven't had 1 bar closing above its midpoint. That is not good for the bulls. Bar 8, breakout above the wedge, 1, 2, 3, triggering the high 3. However, it's a bear bar, so it might be more sellers above. Always in traders, I think it's pretty challenging. Personally, I'd get out above bar 8. I don't think this is a great swing trading environment because bulls are making money buying below bars. Therefore, if they're making money buying below bars, they're probably going to make money on the stop entry soon. And outside down bar, breakout below bar 8 and bar 7, trying to break below the wedge. However, looks like the bears are failing. Bar 10, consecutive bear bars, 9 and 10. And again, trying to break out below the bar 7 wedge. However, it looks like the bears are failing. But bad signal bar above. Bar 11 triggered the signal bar above bar 10 and another doji bar. We have 1 bar left in the hour. Right now, it's a bear bar closing on its low. You have to wonder what bar 12 will look like. Bar 12 often will reverse kind of drastically and disappoint traders on the hourly chart. Here's an example. So bar 12, here's the open of the second hour. We rallied, and the final bar or 2 reversed the bar back to the open. And then there's bar 12. So now 3 pushes down, 1, 2, 3, but tail above bar 12, probably going sideways here. The bears, they see a spike in the channel. However, when bulls are making money in the channel, increases the odds of a trading range, and more likely we're going to go to the open before we go down to here. 13, inside bar. Bears want a bear breakout below a wedge and a measure move down. Double top with bar 4 and bar 8. Probably won't get it though. 14, tried to break out below, failed. And eventually, if the bears keep trying and they keep failing, the bears are going to give up and the bulls are going to win. And that was right here. So consecutive bull bars, looks like the bulls are giving up, or the bears are giving up. Test of the moving average, but after a wedge bottom, increases the odds of 2 legs up and a test of the open of the day. And 18, it's an inside bar, so a pullback bar. The bulls got a small second leg up and it's reversing down, testing the 12 high. However, with 4 bull bars up, probably buyers below, and a second leg up. 20, closed above the open of the day. Possible second leg trap or a wedge. 12, 17, and 20. However, tight enough bull channel. We have a wedge here on the sell-off. This is probably not the second leg. This is probably 1 leg pullback and a second leg up. Bear bar closing on flow after the almost outside bar on 20. Reasonable to exit longs below the 21 low. You can see some bulls disappointed on 20, tried to get out at the close of 20, and they got out below this bar. 3 consecutive bear bars. However, probably a second leg up, and the bulls will try and break above the open of the day and the high of the day. So wedge bottom. And you have to wonder if the market will get a measured move up from the low of the day to the open of the day, projecting up. 2 legs down, testing the 20 low. We actually went below it, I believe. 74 even, so we touched the 20 low. And give me just 1 second. Yeah, so we touched the 20 low, trying to form a double bottom. Probably buyers below 20. However, this looks like a trading range. If this was going to be a strong trend, the market would not break above an obvious resistance level like the open of the day and have a deep pullback. Second entry buy, 24 and 27, trying to break above the open of the day. However, here on 29, they did get the breakout up. Possible 3 pushes up though, 8, 20, and 29. 30, follow through, 4 consecutive bull bars, probably going at least a little bit higher, but you have to question that it's possible it's a wedge top and you have a gap down. So gap down, and here's a pullback. 32, follow through, probably going at least a little bit higher, but getting close to the 60-minute moving average and around the 50% pullback of this gap down. So it might be more sellers up here. Bear bar, 32 for the wedge, 1, 2, 3. Reasonable for bulls to exit below. Other bulls will wait for a second entry or for 2 or 3 bear bars closing below their midpoints. High one buy, 33, but doji, probably sellers above, and sellers above 32. Possible gap here, so dangerous to be selling up here. 34, bulls bought the 31 close, disappointed 32, trying to get out around on break even on 33 to 34. And 35, another bear bar. Now you have 3 out of the past 4 bars closing below their midpoints. Increases the odds that the first reversal up may fail and that this is a wedge top. So 3 pushes up, 1, 2, 3. Traders may start giving up below bars. And you can see as this bar went below 35, it started to gain momentum, started to go below the moving average, and more and more bulls started bailing out of longs, and bears started selling aggressively. Exhaustion, so 3 pushes up, 1, 2, and 3. That means we're probably going to test the 28 low or the 36 low, or excuse me, the 26 low. 36, probably sell to close. First reversal up will fail. And trader sold the close of 37, so 37, there we go. 36, sell the close, 37, follow through, may get a measured move down. of 36 and 37. And this was a low probability event, by the way. And when you see this, the odds favor the second leg up. When you see this and you're long, you just have to get out. You just close the trade. Don't try and manage your way out of the position. You know, it looks easy how people realize, oh, well, the market came back to this, but can you really hold all the way down to here? And that is just too difficult for most traders to do. Better to just get out and look to sell a pullback. Get out of the trade and get in the right direction. Give me 1 second. So probably going to get a measure move down from 36, 37, 38. It's sell to close. It's a micro channel. 38 is a warning that we may get a pullback soon. And you can see traders beginning to scalp out at the 38 low. Inside bar, so may pull back here. We went above the 38 high. And we're turning down. So what happened here? Well, some bulls arguably betting on a higher low. Maybe they bought 41 even though it wasn't a great buy. Disappointed 42, trying to get out, break even at the 41 close. And that's why this bar went outside down. So for the bulls that got out, for the bears that got out, reasonable to sell again below 43. Breakout pullback short, betting on a test of the 14 low and the low of last week. 3 consecutive bear bars, might be more sellers above than buyers. And another bear bar closing below its midpoint. So pretty much 3 out of the past, maybe 4 bars closing below its midpoint. Increases the odds of sell to close and a second leg down. So leg 1, pullback leg 2, may get a third leg down here. And another bear bar, 46, but bigger body. So might be exhaustion, may have to pull back here. Some traders will sell the 46 high, betting on sellers above. And there's the second leg down, or the third leg down. So 48 breaking below 14, 3 pushes down, 40, 46, and 48. 48 enough of a surprise that you may have to have a small second leg down. 49 follow through, testing the low of last week. Consecutive sell climaxes. 48, 49 strong enough for a second leg down, which is what happened in this sell-off here to 54. 50, 51 testing the 14 low. Bulls bought the 14 low during 48, scaled and lower, getting out break even. 52, breakout pullback short. Some bears sell below and scalp out. The problem with being short down here is consecutive sell climaxes here, here, and here, and then here. Increases the odds that the market is going to have to pull back. So the bulls, the reality is you will have bulls buying the low of last week, buying more lower. And the reason for that is, look right here. This is all support down here. So traders are buying in this area, betting on a trading range, and the market failed. So you'll have bulls, go back to the way we had it. Bulls will buy down here, betting will get back to here. Always in traders, I would get out certainly a couple ticks above this bar, or a couple points, certainly above this bull bar. The odds are we're going to get back to the 51 high and probably the 48 high. 48 was probably exhaustion, but 60% chance you get a second leg down. Consecutive bull bars, probably, even if we pull back, probably going higher. And testing the moving average, haven't touched it for just about 20 bars. So probably we'll pull back here, but strong enough 4 bars that probably going higher, and we'll have to get to the 48 high. 60, bear bar closing below its midpoint, but again, probably buyers somewhere down here, but they may not come in until 50% pullback, which would be somewhere around the low of last week. Give up bar, but might also just be a sell vacuum test of 50%. Doji bar, 62, and second leg down. So 61, surprise, odds favored a second leg down. 62 was the pause, and then 63 led to a second leg down. 63 is also, I forgot, it's a double bottom with 58 and 63, or with 54. And you can call it a double bottom high or low. Always in bears should probably exit above this bar. It's the second leg. It's a retest of the 54 close. Traders were so desperate to get out that they were willing to get out a couple points above the 54 close. So traders get out here, strong surprise, but 3 pushes up, 1, 2, 3. So it's a possible second leg trap. It's a test of the 48 high. And while 64 is strong enough for higher prices in the second leg, you have to wonder why the big tail. You know, why 64 for one is exhaustive. It's a buy climax, and it's the biggest body on the entire screen, so it's climactic. The tail on top increases the odds of more sideways, which is why I warned that 65 might be bad follow through. 65, it's a wedge, 1, 2, 3, and a double top. You can take the short, however, more likely bears will be trying to get out break even here. Some traders sold this high and scaled in. They sold the moving average and scaled in higher, and now they're disappointed trying to get out break even. 66, well, 65 for the bulls is a breakout pullback buy. Traders bought the 65 low on 66, and the reality is there's some bears that sold the 65 high on 66, betting on a bad high one. 67 went above 64. So now you can argue it was a failed breakout of a wedge, 51, 59, and 64, and the bulls tried to break out a second time and failed. You can also argue 64 was strong enough to reset the count, and that there may have to be 3 more pushes up, 64, 67, and then a third push up. Give me 1 second. Here on 68, second entry short, 2 legs up. Bears sold 65 and more higher, getting out back at the 65 low. Bulls, second entry buy. Some traders will buy above it. Arguably the bears, if they're short, they will not hold above the second entry buy. 3 consecutive bull bars breaking above bar 67, testing the high of 42. We have a measuring gap here. It's a negative gap, so possible measuring gap from the 63 low to here takes you up to 38.75, which is the high of the top of this channel, bar 42. And that's what happened right here. Traders sold back at the 42 high. So 71 probably by the close, but it's the third push up, so dangerous. 72, you can see traders bought, and traders that bought the close at 73 even tried to get 5 points, 4 points, and they were unable to. So a lot of traders bailed. Some bailed out below this bar. Other bulls started buying below here, betting on a micro channel, which is what led to this. Strong bull bar, a little bit of a surprise closing on its high, probably going to vacuum up to the open of the day. What are the odds that we get to the high of the day? Well, they're less likely. Breakout, test to the open of the day. However, consecutive buy climaxes here, here, here. Probably going to go sideways here soon. Testing the 34 low and the 35 low, which is where arguably the bulls got trapped. So may find profit taking up here and might go sideways to down. Bull bar, traders bought 50% of 74. Other bears sold the high of 72 or sold the high of 73 and more higher, trying to get out break even. And outside down, so sellers inside bar, possible final flag, and sellers above 75, which is what happened on 76. 76, reasonable to exit below the bar. Consecutive buy climaxes, probably limited upside, and that's why you exit below the bar. And really going into the close, we went sideways into the close and tested back into here. For always in, arguably always in on the close of 2 or 3, but again, maybe the close of bar 3. I really don't like to trade always in this scenario because you get a gap down and you know you're going to test the moving average, but this is not exceptional price action. You know, I want to see something like this, gap down, huge bull bar, not terrible follow through. I mean, it's not great follow through, but no bear is going to sell below bar 2. That's what you want to see for always in. You don't want to see this because the odds favor sideways to down in reversal. So if I was short, you know, and you're swing trading, which is not what traders are doing here, it's going to make it really difficult. I think it's just too difficult for traders to hold, you know. If they get out here, it's a 50% pullback of this sell-off, so not ideal. And, you know, do they get out above this bar if it triggered? You know, it's just not that simple. You know, just look over here. This looks like the market's going to reverse. It doesn't look like the market's going to do this. So not really an ideal always in, more of a limit order market. Buyers below, sellers above. 3 consecutive bull bars, you know, probably always in long, traders can buy. And they get out below this bar, aggressive bears can sell. And if they do, you have 2 legs down. Bears get out above this bar. Maybe bulls wait for this bar and they can buy again. Surprise breakout, probably going a little bit higher. And bears get out for the wedge. Bulls get out, bears short. And bulls giving up, so more bears will sell. No reason to get out here or there. You know, do you get out there? You know, tough call. I probably would. Consecutive sell climaxes. And if you did, you'd sell again below, you know, maybe the second entry here. You have to get short again below this bear bar here, but pretty challenging to do. And if you do, you get out above this bar, aggressive bulls buy. And maybe bulls get out there. Hard to sell though below that. And then bulls can buy again here, aggressive bears get out. And arguably you stay long really until the close and you get out below that bar. Limit order trading, you pretty much can buy below anything here. First reasonable limit order trade probably is sell above bar 3. And as far as that, maybe buy below 18. And what's the next one? You know, this is pretty tough, but you can sell maybe above 39, a couple points above 39. And then above 46, but hard to do. 3 pushes down, not ideal. And then probably buying the 56 low, 57 low. And it's aggressive, but buying the 65 low. That's probably all I do for the most part. Or buy the close, sell the close, probably buy the close 16, 17, 18. And, you know, buy the close in here. But push-ups, I have to be careful. Sell the close 36, sell the close 37, and then probably 44, 45, sell the close. And I wouldn't sell down here. It's just, you're at support, probably going to fail here. I'd rather wait for the buy. Maybe buy the close 56 or 58, but aggressive. And then buy the close 64. You can really buy any of these closes all the way up. Okay, I'm going to wait for, I've still got a few minutes, a little bit of time, so I'll wait for questions in either the GoToWebinar chat or the Discord chat. So I'll wait a few minutes and see if anyone has any questions over the day. While I'm waiting for some of those questions, I want to pull up the euro dollar. It's kind of an interesting what happened. So let me pull up the daily chart. So you can see it's hard to read the scaling here, but this is the daily chart. And the bear's got a surprisingly big bear bar that tested the 1,000 day ground number, and really bad follow through here, 4 consecutive bull bars. However, this was strong enough that the odds are the bears are going to get a second leg down. And this is disappointing, but it's probably not enough to reverse the move. So this is probably that second leg, and the big question on everybody's mind is, how big of a second leg is it going to be? Is it going to go down and then reverse up? Or is the second leg going to go down to here? I just want to look at Bitcoin, just out of curiosity. So there you go. So still channeling down, forming gaps. Broke above here. Now we're selling off. So we basically tested the middle of this trading range. Now we're testing the bottoms. A lot of bear bars in a row. Probably buyers below though. Okay, so a few questions have come in. Oh, quite a few questions. Okay, so do I like TradeStation more than NinjaTrader? I started out using TradeStation, and I really like the charting. Therefore, TradeStation is the primary one that I use. But that doesn't mean it's any better than NinjaTrader. I just like the, I'm used to the charting. I'm used to the functionality, so I like it. Okay, another question. I'm assuming when did you start out? I started I started studying out in 2013. So I've been following him for quite a while. Part 2, let me just read the question. So how do you keep yourself from taking bad trades and that bring down your confidence, or how do you prevent yourself from exiting early at good trades? Yeah, that's just hard experience. I think the biggest thing for me is I was always pretty curious with scalping, and I was always fascinated with limit order trading. And what I learned was, prime example, bar 36. And I've got a few minutes and I've got to go. But you just learn from experience. You learn from doing the wrong thing. I'd get trapped here and then get several legs down. Yeah, another question on how long until I got confident. Well, again, it's just, you just make a lot of mistakes, and I learned from them. And then I learned, case in point, I gotta move this question box out of the way. It's way too big. My case in point, if you don't exit below 36, you're just going to get killed because you'll exit down here. So I learned that exiting below 36 is way less painful than exiting down here. And then I got better at learning, okay, if I exit below 36, if I'm long, I can short and make up for the loss. So you just kind of figure out, you just do a lot of dumb things. That's what kind of happened to me. Yeah, you mentioned buying below a bar on a limit order. However, they often don't trigger for several bars. Is this what you mean? Yeah, pretty much. It's more or less kind of bulls buying below bars, scaling in lower, and scalping out. And then there's other little things where, the market's going to come back to here most likely. Traders will sell. Bulls will sell out of longs here and scalp out. I've got to go in just a second, but okay, this is a good final question I'll answer. Well, swing trades for beginners. Tough, maybe second bull bar 16, hold for a couple of legs, sell below 36, 37, but risk is big. I've got time for one more question. Can you talk about some of the trades you took and how you manage them? Yeah, I'll mention one or two. So I actually was long. Case in point, I made the mistake of being long below here. I bought, scaled in, and I was too slow to get out here and just take the loss, and then I had to take the loss down here. But the point with that is the more you learn to get out quickly, you can reverse to short and make up for it. And I sold here and got out here. And I also bought down here and scalped out. So anyways, I've got to go, but I hope y'all have a good evening.